Welcome to the European Market Open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua in London with Tom McKenzie.
And here are your top stories. Putin's sanction pushback, Moscow hardens capital controls and shuts Russian airspace. Ukraine agrees to more talks, even as shelling of its second largest city continues. Stocks are mixed amid a lull in volatility sparked by the war, oil gains, and Jamie Dimon says the SWIFT sanctions may bring unintended consequences. Plus, the corporate exodus continues. Companies from Daimler to Shell abandon Russia, severing 3 decades of foreign investment.
Now let's take a look at the futures. Tom, it's very clear that we did start off with futures lower by this, but actually we seem to be picking up a little bit of speed. The focus now is on whether Russia gets kicked out of the MICEX, so some of the equity benchmarks, and of course the fallout locally or domestically on what it means for the Russian economy as Western countries continue isolating it.
Yeah, absolutely. The ruble, of course, remains under pressure. The markets, the equity markets in Russia have been closed. We'll continue to watch the ruble, of course, as the headlines continue to cross on the conflict in Ukraine. In terms of how things are opening then, in the first few seconds of the European trading session this Tuesday, the FTSE 100 is range-bound as things stand. He had those very modest losses comparative to the geopolitics yesterday across the European space. US futures, by the way, are pointing higher. The Spanish IBEX now down 0.1%. The UK and the FTSE 100 now moving lower by about 0.1%. And a similar picture for the CAC 40. There aren't major catalysts at this point. We have that pushback in terms of capital controls and the urgency there you're seeing in Moscow to shore up the financial system. And of course, we look ahead to the Fed testimony as well later this week, Wednesday and Thursday. Let's switch it on cross assets, see how things are playing out then. A very modest move risk on, and you're seeing the 10-year yields just moving up slightly, 185, just a move by 2.5 basis points. S&P futures pointing to gains of 0.4%. Brent is just about below $100, about 99. We're watching OPEC Plus, of course, that meeting starting as well today and tomorrow, up almost 2% on the session. And Bitcoin, 43,000. This is interesting as a gauge, speculative gauge that maybe cryptos could be useful in this heavily sanctioned era that we're looking at. And you've seen some upside there of 4.5%. Let's have a look quickly then on the ruble before I cross back to Francine for how the sectors are playing out. This is across 2 days, losses of more than 0.2%. And again, just a reminder that the capital controls are now in place. Is this even a tradable currency at this point? Francine?
Yeah, Tom, so we look at some of the sectors on the move, and if you look at what's happening today, of course we focus on energy. If there was the Russians or on the European side a decision not to take their gas and oil, it would have a huge impact on some of these sectors. Today, healthcare, one of the biggest gainers, staples not doing too badly. On the downside, we have not only travel and leisure, the biggest losers by around 2%, but of course some of the auto and auto parts. But really, Tom, it's a story about some of the movers. I know you're looking at Shell. A couple of things that we also need to watch out for: Boeing closing its office in Kiev, pausing operations in Moscow, Uber speeding up the sale of its stake in the Russian taxi. So, you know, apart from the geopolitics and the impact they have on oil and, of course, some of the gas, it will be the individual stocks that will be moving some of these sectors.
Absolutely. That great corporate decoupling from Russia is absolutely fascinating, and it's picking up in terms of its pace. Shell, of course, front and center, following BP, selling down its stake in Rosneft, at least trying to unwind that, currently down 0.5%. We're focused on the cyber space as well. Darktrace, listed here in the UK. Dan Ives from Wedbush came out over the weekend saying there is a very real risk now of cyber warfare. Some of these cyber companies that protect against some of these hacks gaining on the back of this, currently up 1.3%. And then Francine mentioned the airlines. Russia closing its airspace after Europe closed much of its airspace to Russian jets. Wizz Air, just to take out one company in focus, of course, big exposure to Eastern Europe, currently up 0.8%. Francine.
Let's also get over to our Bloomberg MLive managing editor, Mark Cudmore. Mark, you're looking at Russia's importance in the global economy just at a time where also MISEC's trying to figure out whether they kick out Russia.
Yes, absolutely, Francine. So there's so much confusion around trading Russian assets at the moment. How do you sell your bonds? Can you sell your bonds? How do you deal with banks that now are blocked from the SWIFT system? How do you deal with entities that are sanctioned? What can the Central Bank of Russia do? There is so much confusion, and it'll take us many days to get clarity. But I am going today make it very easy for the macro trader, and I'm going to say that when it comes to the macro impact beyond the most directly impacted assets, the macro impact on global markets, just look at commodities pricing, just look at oil pricing. Otherwise, beyond commodities, beyond the actual military and humanitarian impact, but for markets, there is no real impact to the global economy from what happens to Russia and the sanctions. The share of Russian GDP before this whole event, as of the end of 2020, was 1.75% of world GDP. It's going to be much, much lower. This was the peak around 2014 before the Crimea crisis. Then it's slumped below 3% now. It's going to fall a lot further in the coming days. Ukraine is another 0.2%. Belarus is another inconsequential amount on top. So overall, between all three economies, it's less than 2% of the global economy. And their financial capital market relevance is way smaller again, completely insignificant, way less than 1% combined if you involve their equity markets and debt market, capital markets involvement. So if you want to know the macro impact, look at commodities. If you want to know how to trade Russian assets, I can't help you at all.
Mark, great insights and great context on, of course, the economic and market implications of what we are seeing. Less than 2% of global GDP, of course, including Belarus, Ukraine and Russia. Our MLive's Mark Cudmore out of Singapore. And as the war in Ukraine escalates, President Putin has hit back with countermeasures in response to punishing Western sanctions. Russia has banned its residents from transferring hard currency abroad and blocked payments on external debt. Measures against Russia have not seemingly impacted events on the ground in the conflict as Russia escalated shelling overnight of key cities in Ukraine. Joining us now is Bloomberg's senior reporter, Mark Champion, who writes on international affairs and was on the ground in Ukraine ahead of the invasion. Mark, Russia then continuing the intensity of their invasion despite the West sanctions, and some pointing to what they see as a change in military strategy that could be much more devastating for the civilian population. What do we know?
Yes, exactly. The failures of the Russian campaign in its early days may, unfortunately, mean that the next days ahead are going to be rather worse for both civilians and for the Ukrainian military, which has held out, far beyond most people's expectations against a massively superior force. Really, the problem has been that the Russians logistically couldn't get their things in place. Their whole assault was based on an assumption about the Ukrainians and the fact that they wouldn't fight and that they would be relatively happy to see the Russians come in. None of that panned out. So the rather light touch that they took at the beginning, as bad as it was, is now likely, and you can see the big first signs of it, it's reverting to traditional Russian artillery-based tactics, which involve much more suppression of cities.
Mark, I find it very confusing to figure out exactly if citizens of Russia support Putin, if there's a risk of him being overthrown, and I don't know how long that would take, or if there's a serious risk of escalation, including the nuclear option.
Well, there is risk of escalation. Any fight, war on this scale does involve a risk of escalation. The fact that the NATO de facto has become involved by sending large amounts of equipment to the Ukrainians, that also it presents a risk of escalation, especially, for example, there are some reports completely unconfirmed, but if anything of this kind were to happen, that several NATO countries are sending jets to be based in and airfields outside of Ukraine that would then be flown by Ukrainian pilots. If that sort of thing were ever to happen, then you'd have a very serious risk of escalation because you've got a cross-border war developing.
All right, Mark, thank you so much. Bloomberg's Mark Champion there, looking, of course, at the geopolitical situation in Ukraine. Now, let's take a look at the corporate reaction in the Ukraine invasion with our Danny Berger. Danny, again, moving parts, and we may see more firms deciding to get out of Russia.
Right, it's this idea of, to put it plainly, self-sanctioning, even though these companies might not have any sanctions that directly apply to them or to those exposures they have in Russia. It's this unknowingness of what comes next, and also how the flow of goods will even work with many Russian banks cut off from the SWIFT messaging system. So we see a lot of industries, from car makers like Daimler and Renault to big oil and gas, pulling back or trying to get rid of their Russia exposure. Now, oil and gas is an interesting one. Yesterday, over the weekend, it was BP, it was Equinor. Late yesterday, after the close, Shell joining in, saying that they would exit their equity partnership with Gazprom. Now, according to Bloomberg Intelligence, it is a very small part of the overall picture for Shell. So in terms of impact, it's minimal. And we are seeing Shell rise slightly today, about 0.7%. But I should say, in general, it sold off yesterday. A lot of these stocks sold off yesterday. So it's this rebound with more calmness of volatility. Total, another one, up 1%. Total is another one of these oil and gas companies. There's questions as whether they'll be the next to try to offload their Russia exposure. There's concerns on that. Who would buy it? Do you just need to take a write down? But again, it fell yesterday, so it's a rebound. And also a slight rebound for banks as well, not as strong as perhaps oil and gas, up less than 0.5%. But this is one of the other corporate spaces to watch, not just for those banks with direct exposure, but is there a risk of a more US dollar and European funding crisis if we start to see missed payments because of Russian banks who no longer have access to SWIFT?
Danny Berger, thank you for running us through the corporate unwinding that we're seeing when it comes to Russia and that Western exposure. There was another line, Francine, that I saw in one of the Bloomberg stories about the potential for Putin, who's threatened, of course, retaliation against the West, to target even Western assets in the Russian market, and whether you start to see that happen as well. So something else for boards to be working through in this incredibly challenging time as they weigh up the risks and the pros and cons of having any access whatsoever to the Russian market.
Yeah, I think every board across the world is now probably in crisis mode. I know they're meeting people flying in and out to try and make sure that they're close to the teams and figuring out what to do. And then if you look at the markets, and I think Valerie did some great charts on this, which I don't know whether we can bring up or not, but investors in corporate bonds are trying to suffer, or are starting to suffer the most. And so this could play out over 1, 2, 3 days. So you can see some of the European credit spreads widening. But if you look at the financial market upheaval, we haven't really seen that much yet, but we tend to look at inflation, we start to look at what this freezing out. So I think it will take at least a couple of days, if not a couple of weeks, to see the full extent of it.
Which is why it's so important to continue to monitor those liquidity conditions. Okay, let's bring in markets editor Christine Aquino. Christine, what should investors be watching at this point?
Well, Tom, I think it's very important that we keep an eye on, again, developments when it comes to a company's ability to service their debt. We of course, saw the developments overnight from Russia saying that they are banning residents from transferring hard currency abroad to service debt. Now, keep in mind, of course, that this is an important distinction. This refers to new debt, so it doesn't necessarily affect whatever existing liabilities that companies currently have. But on the whole, I think this is something that markets are still very, very worried about. Again, with just the mechanics of Russia being cut off from SWIFT, there's that question of how are they actually going to be able to transfer those funds abroad, even if they have them and they have the ability to service that debt? How would that actually work operationally?
Yeah, and again, I mean, there's so many questions, right? I mean, we could speak about this for 5 hours, Christine. Is that if they cut, for example, cut gas to Europe, oil and gas, what does it mean for the European economy? But is is there something more? Do we know the exposure, for example, of banks? I know Citi is taking like a 9 billion hit out of this. Like, how long does it take to work out exactly the exposure of some of these big institutions?
I think quite some time, Francine. Yeah. I think there's going to be some very creative accounting and unpacking of statements that has to happen at the moment. And I think that is part of the confusion over just companies untangling themselves from Russia. This is part of the process of it, is really trying to take a look at how exposed and how big are the exposures of some of these companies. And yeah, I think this is part of why we're seeing, again, a lot of investors kind of really not having a clear path at the moment on how to trade this, because it's still very much an unfolding situation. But definitely getting a sense from individual companies on their next steps, looking for details on how exactly. I think there's a lot of what investors are looking for at the moment is the details of the how, the mechanics of it exactly would be very important.
Okay, Christina Kino working through the implications in terms of working through that exposure and, of course, the implementation of many of these sanctions that have been put in place and what it means for corporates and their boards. Coming up, the ruble is under pressure. Of course, it continues to be under pressure as growing global sanctions hit Russia's currency. Investors weigh the impact. We've got more on that next with John Hardy, head of FX strategy at Saxo Bank. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. You know, there's a huge mismatch in supply and demand. Prices are high. You know, prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open, everyone. So 16 minutes into the European trading day, we're seeing, of course, a lot of pressure on some of the companies that are still trying to figure out how to decouple or how to isolate Russia, severing ties. Our Christina Kino had a great roundup of how difficult that is because the economies in many parts are so intertwined. Now, the European stocks pretty much at the moment taking in their stride because, of course, the implications are for higher inflation, so less to do or less adjustment when it comes to monetary policy. The FTSE actually gaining and the DAX down some 0.4%, Tom.
And we have an update on the military front. Belarus, these are lines crossing now. Belarus saying it has no plans to take part in the conflict in Ukraine, saying that Russia has not asked it to take part militarily in that conflict. We'll bring you more as and when we get it. Let's go back to the currency then of Russia. The ruble has stabilized in offshore trading after a plunge of as much as 30% the day before. That's investors weigh the impact of sanctions against Russia and Moscow's countermeasures. Governor Elvira Nebyaluna spoke yesterday.
Today, Russia's financial system and economy are facing a totally abnormal situation, and the Bank of Russia will use any necessary tools very flexibly.
Okay, let's bring in John Hardy, Saxo Bank Head of FX Strategy. John, thank you for joining us this morning. Anything that the central bank and the authorities in Moscow can do to put a floor under this currency, is anything going to work at this point?
Well, that may not be up to the Russian central bank, because the issue is the degree to which the sanctions will mean that the Russian central bank is unable to mobilize its foreign reserves. So their fate is not necessarily in their hands, so to speak, and what happens next, I have no idea, but the pressure is going to be maximum, I think, as long as the reality on the ground looks like it does in Ukraine. But other than that, your guess is as good as mine. But there is the practical consideration and the difficulty that if they're not able to mobilize foreign reserves, then their fate is not in their hands, or the fate of the ruble.
Yeah, I mean, John, given all of the uncertainty, and actually there's also a think tank coming from China saying that they think Russian sanctions will backfire, with analysts predicting heavy costs and discord for U.S. and its allies. Given all of this uncertainty, also retaliation from Russia, how much volatility are you expecting the FX market as a whole?
Well, I think the most remarkable thing has been the lack of volatility in this market. If you look beyond the ruble itself, the traditional sort of risk proxies and risk on, risk off type of behavior you would see across markets is quite modest. Now, that could change, of course, if there's some sort of escalation here, but it feels like that the market is taking this in stride. We do see traditional risk proxies like the euro versus the Swiss franc. It has hit new lows. Those are not dramatic new lows, but we're also seeing more of an interest in looking at this from a commodity angle. There's a huge sort of commodity overlay across global FX, where we're seeing currencies that would traditionally be trading very weakly, the Australian dollar actually trading quite strongly because of, if you look at Australia's very impressive portfolio of commodity exports. Wheat, which is very much in play here with Russia and Ukraine offline potentially with their exports. Wheat, LNG, iron ore, coal, etc. Australia has it all, has a trade surplus now. So there's a very different feel to this crisis than other episodes in the past, that's for sure.
John, what are you seeing in terms of demand for the greenback? Any signs of panic?
No, actually not at all. Normally, again, you would see in a sort of broader risk-off sense, you would see the dollar performing quite well. That has come off to a degree. There's also so many moving parts because some of the previous dollar strength was based on a more hawkish Fed. That has also been priced out slightly, at least for the next, at least for the March meeting. Is that justified? We'll find out this week with Powell's testimony, probably before the Senate. But the dollar just sort of passive, I would say, relative to these other themes that have been stronger. And that is, again, the sort of commodity angle across all of this. And that does not benefit the dollar.
John, I understand that there's been a modest reaction, but actually I cannot believe that G7 countries are trying to freeze out the 11th biggest country in the world without more consequences. So are you uneasy about the lack of volatility and markets taking it in their stride?
No, quite the contrary. I find it quite impressive. Of course, I'm uneasy about the situation itself and where it could go. That is my main source of unease. And the main risks are sort of concentrated in Europe. Again, you were mentioning it earlier in the program about the risk of energy deliveries into Europe. That sets the bar in a very different direction for Europe. We have suddenly a cessation of gas supplies. The seasonality is improving, but that is certainly a risk. And then other forms of escalation I don't even want to consider or think about that could make this obviously change, turn the tables on the entire situation here. But so far, status quo, as long as it grinds on, it doesn't get worse. Feels like the market is taking in stride, and of course, it means we could see a very interesting fallout or improvement in markets if we see a sudden cessation of hostilities on the ground. Let's all hope for that.
John, you touched on the commodity currencies. Do the linkages between the volatility in the energy price complex and those commodity currencies continue, do you think?
Yeah, I mean, if you look at, again, there's a commodity overlay. So if you look across the G10 currencies, the main developed market currencies, you see something like the Swedish krona, very linked to the euro, cyclical currency, risk sentiment. It's doing very poorly. But its neighbor, Norway, very strong recently on the surge in energy prices. Normally something it might ignore if the source of those energy price rises are geopolitical tensions. So you're just seeing, you know, the Brazilian real has been very, very strong, except for maybe the last couple of sessions. There's a strong desire to put on the risk that this commodity price inflation is set to continue. And it's just a very strong theme at the moment that I think could persist as long as commodity prices are elevated and risk going higher.
All right, thanks so much. John Hardy there, Saxo Bank Head of FX Strategy, of course, joining us on what exactly is going on in the FX market. I mean, I know markets in general, certainly equities, have been whipsawed by this conflict and steps to isolate commodity-rich Russia. I still really can't quite believe that this is it. I mean, there must be some kind of readjustment in the couple of the days to come.
And looking, I was out yesterday, but looking at the moves across the European equity space yesterday was remarkable to me to see the relative immunity to European stocks, apparently at this stage, to what is happening on this major global scale of this geopolitical conflict and turning point. Okay, as the war in Ukraine escalates then, President Putin has hit back with countermeasures in response to punishing Western sanctions. We're going to get into the sanction fallout later this hour. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
Welcome back to The Open. Let's focus in on Russian stocks then. The markets there closed, the equity markets for a second straight day. We have a terminal chart that shows, though, the impact on some of the biggest Russian names listed here in London. Of course, many of those facing sanctions, including Sberbank. And the reminder of the new reality on the screen, on the terminal, with the red line at the top of the terminal showing sanctions apply to this security. And the impact has just been enormous, Francine.
Yeah, I mean, as Russia canceled trading of stocks in Moscow yesterday, it's really the Russian listed companies in London that cratered. Coming up, more on the war in Ukraine. We spoke to Jamie Dimon of JP Morgan. This is Bloomberg.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Putin's sanction pushback. Moscow hardens capital controls and shuts Russian airspace. Ukraine agrees to more talks, even as shelling of its second largest city continues. Stocks are mixed amid a lull in volatility sparked by the war. Oil gains, and Jamie Dimon says the SWIFT sanctions may bring unintended consequences. And the corporate exodus continues. Companies from Daimler to Shell abandon Russia, severing 3 decades of foreign investments. Now, if you look at the markets, Tom, I have to say I'm surprised that things are pretty cool, because if you look at some of the gruesome videos also of war coming in through Twitter and social media, it will probably harden the West's position when it comes to sanctions. And I don't know whether you can still import Russian gas and oil in this kind of situation.
There's the human story, absolutely.
Yeah.
The suffering of civilians, particularly in the second largest city in Ukraine, and the shelling, indiscriminate, it seems, by Russian forces. But we do have a duty on this show, across programming, to focus on the market impact as well, Francine. You're right, absolutely. It seems like the markets are relatively sanguine given the severity of the crisis in and around Ukraine. We know that Vladimir Putin is pushing back with his own countermeasures. We mentioned that in the headlines around the airlines now stopped in terms of flights, Russian flights into European space, and equally European airlines banned from Russian airspace. Markets currently, the benchmark across the European space, down 0.4%. We'll look at the sector shortly, but it's basic resources and banks that are holding up just about. That's being reflected in the FTSE 100, currently gaining 0.1%. Brent remains at around $99 a barrel. Looking ahead to OPEC Plus today and tomorrow to see if there is a response there. And we know that the US is looking at its own strategic reserves. The DAX over in Germany is down 0.8% or 116 points. Let's switch it on and see how things are playing out sector by sector then, and whether the focus for investors starts to shift to the testimony from Jay Powell, the conundrum for the central banks. It was never going to be easy this year for the ECB and the Fed and others. This crisis, this geopolitical crisis, the magnitude of it just makes it that much more complicated. So everyone will be listening in the investor community very closely to what we hear from Jay Powell later today. Basic resources gaining more than 1.5%. Banks also up 0.4%. Yields are just slightly up by about 2 basis points on the US 10-year. Bit of a risk-on mood reflected in those yields. Telecoms also high, as is healthcare. Everything else is in the red. Bottom of the list, travel and leisure down more than 2%. Francine.
Now, JP Morgan Chief Executive Jamie Dimon says there are ways around sanctions involving the SWIFT messaging system. He spoke exclusively to Bloomberg's Ed Hammond.
I'm going to defer American foreign policy to the American government. They're very smart. They got a lot of experts in national security and economic policy, and hopefully they're doing the right things to bring it to a conclusion quickly. And also, my heart goes out for Ukrainians. I mean, this is a humanitarian crisis for them. We're announcing later today some of the stuff we're going to try to do help there, and hopefully more to come.
And just talk to me quickly about SWIFT and what that means for the global banking industry, if indeed these sanctions that have been proposed are followed through.
There's a little misinformation today. The government's going to decide how to use sanctions, how to use SWIFT. I don't want to bore your users. A sanction says I cannot do business with you. A SWIFT thing says I can't use a communication to do business with you. I can still do business with you. And there are a lot of workarounds on SWIFT. So they're different tools, they're used for different reasons. And, the banks are talking to the government so everyone understands the issues, not because they're for or against any particular thing.
On the question
but these war doesn't always follow the path you want. Financial sanctions don't always follow the path you want, so people should be very thoughtful how they go about these things.
But the question of workarounds to SWIFT is a very important one, because that seems to be a concern, that if an alternative system is established and begins to get traction, that can present real risks to the sort of financial stability of the West.
Well, but remember, they can just stop us from doing it by telling us. A sanction is very targeted, very specific, very clean, and depending on how you apply it, you can apply that in multiple ways that you can't get around. There's no workaround in that kind of sanction, nor should there be. I'm an American patriot, and we're going to do what the American government tells us to do. And so I think people worried, I think they're more worried about the unintended consequences. What countries you hurt, what people are going to do workarounds, how you fix that in the case you shouldn't. Remember, the government itself wants to have an open conduit, it looks like, for energy payments. So there are a whole bunch of issues they got to work through.
JP Morgan CEO, of course, Jamie Dimon, speaking exclusively to Bloomberg's Ed Hammond on Russian sanctions and the SWIFT messaging system. Let's get into the impact then and the fallout of these sanctions in more detail. Bloomberg's Nick Comfort covers European finance and regulation, joins us now. Nick, what do we know so far then about the banks being cut off from SWIFT? We've been waiting for the details. We've been trying to work through the impact across the banking sector. Where do we stand?
Well, we're expecting, we know that 5 banks at least will be cut off from SWIFT. That's from the U.S. Treasury statements over the weekend. So those banks being Sberbank and VTB, obviously some very big, the biggest banks in the country, but also 3 smaller ones, Odkriti, Novicom, and Sovcom. And really the big banks here are, as I said, Sberbank and VTB. They're about half of Russian banking assets. The smaller ones, about $80 billion in banking assets. So it's also pretty meaningful. But I mean, the really big question then is is how many other banks are affected, and how do companies and Western banks deal with this? Because if there are legitimate payments that were either pending or were going to need to be made, then they're really waiting to hear from the European Union on this, because SWIFT, being based in Brussels, really needs to follow the EU sanctions directives on this. And so that's when we get the actual black on white verdict from the EU. That's going to be when I think it's going to be a whole cascade of events, or clarity at least for the companies and banks that rely on SWIFT.
Yeah. But Nick, and someone just tweeted me, stop panicking, but this is not about panicking. This is, the more bloody the war is, and the more images the West sees, you could see as sanctions escalate, including maybe doing the SWIFT not for the 5 sanctioned banks, but to the Russian economy as a whole. Like, what are the consequences of that, and is that on the table?
Well, so as far as we know, energy, they're looking for a way in order to allow payments for energy to continue. I mean, let's face it, in Europe, we're very dependent on Russian gas and oil, and it's still the winter heating period. And so this is something which they are looking for ways to keep open. Beyond that, I mean, if you are, let's say, a chemical company or an automotive company, then you're in more trouble than an energy company. So this will have really severe impacts on the wider economy. But I think maybe given the workaround on energy, the next question for me is going to be to see how is the Russian central bank treated, because I mean, energy will still allow large amounts of money to flow to Russia. And so, but if at the same time you're trying to sanction Russia and flows of international capital, then the central bank sanctions will be really key to making that actually stick in the end.
All right, Nick, thank you so much. Nick Comfort there, a banking reporter. And of course, just minutes ago, crossing the Bloomberg terminal, we found out that Maersk, AP Moller-Maersk, one of the world's largest transport companies, has halted bookings to and from Russia due to the war in Ukraine. Now, they mentioned the fact that this is because of the ever-evolving sanctions and, of course, the safety of its employees. But this will have a huge repercussion on trade, will further isolate Russia. And this is one of the conversations that we're having with Jeff Curry yesterday, is that if you think about, what's driving up the price of oil, it's also the fact that it's seaborne, right? It's concerning about getting things in and out from the facilities.
At a time when freight rates had actually started to come down, it's a reminder that those supply chain constraints are front and center once again, particularly when it comes to the export of energy from Russia. And of course, we continue to focus on Russia and the steps it's taken around the invasion of Ukraine. We look at the broader geopolitical issues surrounding the conflict and its humanitarian fallout. That is next. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Welcome back to the Open. We are 41 minutes into the European trading day. You're seeing losses across the benchmark of 0.2%. The FTSE 100 is holding its head above water. Gains of 0.3%, largely on the back of what's happening in basic resources and banks, two of the sectors that remain up today. Basic resources gaining 2%, banks up 0.6. At the bottom of the list, you've got travel and leisure down more than 2%. Francine.
Now, Russia, of course, escalating shelling of key cities in Ukraine. Russian troops heading in large convoy towards Kyiv. Now, meanwhile, EU Home Affairs ministers are to hold an emergency meeting later on the growing refugee crisis on its borders with Ukraine. Now, joining us now is Andrew Wilson. He's professor of Ukrainian studies at the School of Slavonic and East European Studies at University College London. Professor, thank you so much for joining us. I know this is an extremely difficult question, but when President Putin says he's looking at the nuclear option, should the West believe him, and how should the West treat him now to try and de-escalate this conflict?
Well, anything involving nuclear weapons is scary. We should take very seriously. But the timing of this is pretty clear. It came at the weekend when the Russian army wasn't making the progress that it expected. The Ukrainians were fighting well, and the West had supplied Ukraine with more than the Russians expected. So we were at the end of phase A, if you like, with Russia deciding to escalate, probably in phase B. And this is a warning to us to stop doing what we've been doing, to try and enlist public opinion in key Western states to pressurize their governments to avoid danger of nuclear conflict. It's a real danger, but it's a warning to us to stay out.
So it's a real danger and it's a warning. Is there an obvious off-ramp at this point, Professor? At least if there isn't an obvious one, is there one that you can divine, that you can see that potentially we could offer up to Vladimir Putin?
Well, nobody expects much from the negotiations. Certainly the Ukrainian side don't. I think we continue doing what we're doing. Ukraine continues to fight. We continue to help them and resupply them. What happens over the next few days is crucial. The Russians are suffering much more heavy losses than they expected. I don't think they ever intended to go into the big cities. They're encircling them and bombarding them. And economic measures are starting to bite. So you'll probably see a race between Russia's desire to escalate on the ground and escalating economic damage at home. I don't think diplomatic solutions are possible. I don't think we should negotiate with Putin directly. We should support the Ukrainians in doing what they're doing. A few more days and Russia will hopefully have serious doubts about its endeavor.
Really, Professor, you think Vladimir Putin, does he need to lose the population at home? And it's unclear. I mean, we were watching, Russian TV yesterday. A lot of people either support the war because of some of the, the narratives there, or don't even know that a war is going on. So what would make him back down? Pressure at home or oppression from abroad?
Well, the polls show that about 60% of Russians believe the propaganda line that this is all the fault of the West. But 60 isn't 90. I think in reality, a good half of those people are confused. This isn't war in Chechnya or Syria. It is war with what Putin has always been saying is a branch of the Russian nation. In a city, Kiev, which is, mother of all Russian cities, according to the Russian propaganda line. So this is real existential stuff that many Russians don't understand. Russia isn't a democracy, so popular discontent doesn't spill into direct pressure on Putin. But if the economy looks like it's really going to tank, then some people around Putin may have second thoughts.
Professor, if Vladimir Putin and his forces do finally succeed in their goals of taking control of the Ukrainian capital, is there a governance model that he and his team can reliably put in place?
Well, what does taking control mean? A city of 3 million people, quite rightly, the West has been supplying Ukraine with the kind of weaponry for street fighting. It would be very, very bloody indeed. Russia wants some kind of shortcut. It assumed that Zelensky would collapse or flee. But the kind of options that Russia has for putting in place a Quisling government are pretty limited. Certainly it wouldn't be one with widespread popular support or legitimacy. One option that people have talked about is the Czechoslovak scenario, 1946. Then the communists were the biggest party after a real election. They formed a coalition government and they seized all the leaders of power. So an emergency coalition government in which Russia's party grew its influence is possibly their best option. But they don't really have the option of installing anybody with real legitimacy.
Professor, I mean, the China angle to this is, of course, key, and it's unclear how much they're still supporting Russia in this. We've had conflicting messages. Like, how do you deal with China in this equation?
Well, Chinese media and social media is very much parroting the Russian line, but China has given warnings about territorial integrity, thinking about its own territorial integrity, i.e. Taiwan. Russia thinks they can cope with being a pariah state. China is the opposite. It certainly doesn't want to be cut off from the global economy where it has so much influence. So Chinese support for Russia goes so far, but no further. It's not a panacea. It's not a magic. It's not a recipe for overcoming all the sanctions which are hitting Russia now. So Chinese support is useful, but it's not a full alliance, as it were.
Okay, Professor Andrew Wilson, we appreciate your insights this morning. Professor in Ukrainian Studies at the School of Slavonic and East European Studies at University College London. Okay, let's get the Bloomberg First Word News with Angel Feliciano. Angel.
Tom, heavy fighting is continuing to rage in Ukraine, with the country's second largest city, Kharkiv, coming under heavy Russian bombardment. Russia has given civilians one road out of the capital, Kyiv, as its forces push their advance, overshadowing tentative diplomatic efforts at achieving a ceasefire. AP reports that satellite photos show a convoy of Russian forces north of Kyiv, stretching for 40 miles. In other developments, the EU has added further sanctions on some of Russia's wealthiest tycoons. Russia has barred airlines from the EU, Canada, and other countries from its airspace in response to sanctions imposed for its invasion of Ukraine. Russia is a key route for travel between Europe and Asia, but it's now off limits for major carriers, including Air France and Lufthansa. Several airlines had already begun going around Russia or removing some flights from their schedules. Moscow has barred Russian residents from transferring hard currency abroad. The Bank of Russia later clarified the ban on providing FX loans to non-residents only affects new debt and doesn't impact servicing of existing loans. And the Swiss government has broken with a long-held tradition of neutrality and agreed to enforce EU sanctions against Russian companies and individuals. The government's decision came after criticism by opposition politicians and editorials in leading Swiss papers, as well as by other governments. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Angel, thanks so much. Angel Feliciano in London. Now, coming up, the Ukraine crisis has whipsawed oil prices. Could a release of crude reserves by the U.S. and its allies reduce that volatility? More on that next. This is Bloomberg.
soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to the Open. We are 52 minutes into your European trading day this Tuesday. Losses of around 0.5% across the benchmark stocks 600. Three sectors gain: basic resources, telecoms and banks just holding on. Bank sector to positive territory. Let's check in some of the individual movers, though. We've been talking about this great unwind of Western corporates from Russia in terms of their exposure, particularly pronounced, of course, in the energy space. Even though the energy hasn't directly been sanctioned, the SWIFT actions, of course, have had an impact. And you can see we are looking at Fortum, Engie, the French energy company, of course, down almost 5%, and Shell, which we know is looking to unwind its exposure following the decision by BP. Engie down almost 5%, and Fortum as well, based in Helsinki, down almost 5%. They have fairly significant Russian exposure as well. So the ramifications for these corporates continues, Francie.
Yeah, and I have to say the pressure on Exxon and, of course, Total Energy in France that also have exposure to Russia is mounting on also doing something with their stakes there. Now, oil prices are pushing higher as investors try to figure out the possible impact of a reported release of strategic crude reserves by the U.S. and its allies. Meanwhile, traders say Chinese companies are expected to scoop up discounted Russian oil should sanctions deter other buyers. Well, joining us now is Will Kennedy, Bloomberg's executive editor for energy and commodities. Will, always great to speak to you. How much of an impact do you think the release of strategic reserves is likely to have on the oil price?
It's one of the things that's keeping oil sort of at that $100 a barrel level, Francine. Obviously, we surged to 106 last week after the invasion, but the market has actually been fairly calm since then in terms of the headlines futures price. I think that's because traders are trying to balance the risk to Russian flows with the fact that they do expect policy responses. And as you say, the biggest policy response that we expect in the short run is a possible coordinated release, probably through the International Energy Agency, of about 60 million barrels a day, 60 million barrels in total. Don't know exactly when that will happen. The IEA is meeting later today, but clearly it's an attempt to calm the oil market.
Okay, Will, tell us about the role of China then in onboarding some of this Russian crude potentially.
Look, I think the trading of Russian physical crude is pretty chaotic right now. It's been pretty chaotic since the invasion happened. Some banks don't want to finance those exports. Some oil companies are reluctant to buy Russian oil. Some tanker owners don't want their ships to pick up Russian oil. So there are a lot of people sizing up how to keep the oil flowing. Clearly, Chinese buyers have shown a willingness to buy oil from controversial places before. They bought Iranian oil, even though it's under sanctions. So it would be surprising if buyers in China didn't see the cheap discount that Russian oil is attracting in the market and see that as an opportunity to buy. But even there, China is very wary of falling foul of sanctions, or will want to make sure that the moves it does make don't ensnare them in some of the financial sanctions that have been imposed on Russia. We saw last week that a couple of big Chinese banks said they would stop financing oil transactions from Russia. So it's going to take a while for people to work out exactly what they can and can't do, what they want and don't want to do, and how how to make sure they aren't going to fall foul of the financial sanctions as they trade oil. But I think China probably will become already a big buyer of Chinese oil. They will probably become a bigger buyer.
Great. Will, thank you so much for the roundup. Will Kennedy there, Bloomberg's executive editor for energy and commodities. And of course, we're watching for Exxon. And I know I keep on talking about this, but you know, if Exxon and TotalEnergies stick to Russia, despite the pressure from a lot of European politicians, then it could be a game changer for their share price.
Yeah, absolutely. The self-sanctioning that we've been talking about, because of course many of these companies don't face direct sanctions, but of course they're facing pressure from politicians and others to unwind that exposure as this conflict continues. That is it for the European market. Open Surveillance Early Edition is up next. This is Bloomberg.
Is this going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And you know, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project. Initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The capital markets can really help the shift to sustainable and decarbonized global economy. What are you noticing in that as ESG is now the buzzword literally everywhere?
It is definitely the topic of conversation in most meetings I have with company CEOs, with investors, with industry groups. It's amazing.
A SWIFT thing says I can't use a communication to do business with you. I can still do business with you. And there are a lot of workarounds on SWIFT.
We cannot exclude that Russia will take retaliatory steps that will impact energy trade.
It was very clear from the West, energy was off limits.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. The fighting in Ukraine escalates despite ceasefire talks. The city of Kharkiv continues to suffer heavy shelling. The military aggression drives 500,000 Ukrainians to flee the country, according to the UN. Poland says it received nearly 400,000 refugees. And Putin pushes back on sanctions. Moscow hardens capital controls and shuts Russian airspace. Jamie Dimon tells Bloomberg the SWIFT sanctions may have unintended consequences. We'll stay with Bloomberg Surveillance Early Edition this hour. We also speak to the chair of Ukraine's largest commercial bank, Privatbank's Sharon Iski. Send in your questions on IB Plus TV Go. You can also tweet me directly. Now, this is a check on the markets. I have to say there is a bit of surprise from certain parts of the markets that actually the cooler headers, the cool heads prevail, given the heavy bombing and the linkage between some of these pretty horrible videos that we're seeing and the resolve of the West to maybe impose more sanctions or even cut off energy prices. Our Javier Blas, if you follow him, he's from our Bloomberg Opinion, expert on energy, is really excellent on this. European stocks down some 0.4%. It's really travel and leisure that are losing the most. The next one is auto and auto parts, and they're only down some 0.5%. Now, this has to do with Russia closing, of course, its air space, but also it has to do with the price of oil and the price of gas and jet fuel going up after already this sector suffered immensely because of the pandemic. Crude oil currently at 101. We're looking at possible reserve strategies being released, and then Russian ruble 98.65. We've seen a lot of whipsawing over the last couple of days, but then the stabilization of the Russian ruble. But we still need to understand exactly how the sanctions work. In certain cases, a lot of the big banks are trying to weed their way on how to further isolate, Russia and how to go ahead that delinkage. Now, you can see the FTSE gaining some 0.2%, but the DAX, of course, much more dependent on energy coming from Russia, and also closer geographically is down some 1%, the CAC 40 down 0.7%. A couple of things have happened in the last hour, including Maersk saying they will temporarily suspend shipments to Russia. So we'll see any impact on trade there. Now, heavy fighting continuing to rage in Ukraine, with the country's second largest city, Kharkiv, coming under heavy Russian bombardment. This as talks to secure a ceasefire and without agreement, while civilians continue to flee the fighting for safety in neighboring countries. EU ministers will be holding an emergency meeting later on the growing refugee crisis on its borders with Ukraine. Now, President Putin has hit back with countermeasures in response to punishing Western sanctions, and Russia has banned its residents from transferring hard currency abroad and blocked payments on external debt. Now, we're joined by Bloomberg's Christina Kino on the latest market reaction, also Andrew Pease, Global Head of Investment Strategy at Russell Investment. So thank you both for joining us. Andrew, first of all, the market seems to be taking now in their strides. To me, first of all, you don't know if the sanctions will go further as we hear and see some of these horrific images. And actually, have we really figured out how you freeze out the 11th biggest economy in the world without damaging yourself?
That's right. So far, it looks like it's going to be isolated to Ukraine, and the linkages to the broader economy aren't clear. Of course, the big risks are a broader NATO attack by Russia, which seems extraordinarily unlikely. The second one is energy, and the third one is cyber. So I think there are some tail risks there that have some big implications, but in general, markets are still trying to work out what's going to happen next, whether those tail risks evolve. And while that happens, they're going to be cautious, but ultimately, this probably doesn't have a lot of spillover effects to the global economy.
So, Christine, what are markets watching next as the invasion continues?
Well, Francine, I think markets are very much focused, again, on Russian corporates and the government itself's ability to service its debt. We did get those developments overnight from Russia banning its residents and its companies from sending foreign currency abroad. Now, that only applies to new loans, not existing debt. And so, in theory, they will still be able to do that. But operationally, there's a whole big question mark over the fact that they're locked out of the SWIFT messaging system. How are they even going to do this operationally?
Yes, so Andrew, when you look at some of your portfolio insights, again, operationally, we don't really know how the sanctions will, the secondary effect of some of these sanctions or SWIFT. Are you comfortable? We're day 3 of the sanctions. Are you comfortable that there's not a systemic risk or something that actually makes you revisit where you should have your money?
Well, obviously, there's a lot of discussions happening across all asset management firms about what the implications will be on this. And as of right now, and at Russell, we talked to a lot of the managers that we use, and we're getting a lot of feedback from them. And we're reasonably comfortable with the position that we're in and the risks that we're seeing. So, yes, there's a lot to monitor, a lot that's being observed very, very carefully. But right now, we're not seeing anything that's too disruptive in terms of the main asset classes that we're watching.
Christine, how vulnerable are the European markets to any more retaliation from Russia?
Well, Francine, vary. I think there's various ways in which Russia can retaliate that could really harm Europe. The first one probably is via, of course, the energy attraction. Again, Russia is the biggest supplier of gas to Europe, right, and energy. And already we're grappling with an energy crisis here. And so adding this additional risk to that, the potential of gas being completely cut off from Russia, is really going to just raise the anxiety levels of markets around this idea. And then, of course, the potential second-round effects of that via the company exposures, for instance. We know that Europe is very much a energy-heavy sort of a market, and so any implications from that could potentially be a negative for some of these energy stocks.
Yeah, and in terms of specific energy stocks, I mean, we saw, of course, BP, we saw Shell get out of Russia, and there's a lot more pressure on Total of France and Exxon of the U.S. to do the same. Andrew, what does that mean for, you know, some of the sectors that you like or dislike at the moment?
Well, we have liked for a long time heading into this year the rotation out of growth stocks and into value cyclicals, and certainly Europe having an overweight to value cyclicals had been a place that we'd liked, and certainly that's come under pressure from what we're seeing in Ukraine right now, and there has been a little bit of a resurgence maybe back to growth. So I'd still say that once we get through the next few weeks, maybe the next month, and things start to clear a little bit, that rotation will still take place. But certainly it's been tough for sectors, particularly over the last week, like financials, which had been certainly one of the value cyclical plays. On the other side, though, heading into this environment, some of those growth managers that had looked quite expensive heading into now are starting to show a bit more value. Yeah. So there are opportunities out there, and I think that will become clear over the next month or so.
Andrew, I've heard it from both sides. Either the West or actually Europe decides not to buy Russian gas and oil, or, as you know, Christine was saying, a possibility of things ratcheting up as Russia says, right, that's it, I'm turning off the taps. I mean, how do we deal with that?
Well, I think the first thing is, like, I'm a much more comfortable, like, it's a terrible situation, of course, but from a market perspective, it's more comforting that it's happening in February rather than in October. So heading into the northern spring is a little bit easier. But it's unlikely, it's not impossible, but unlikely that it escalates. And we've seen the carve-out so far in the sanctions certainly have excluded energy companies and companies involved with energy financing. And if that was to change, that would be certainly a significant escalation on the part of the West. So I think it's a major watch point, but on balance, it does seem unlikely that it will extend to actually threatening Europe's gas supplies. And to be clear, Russia needs the revenues from gas sales as well, so there is a bit of codependence there. So that would be a major escalation.
Let's also look at some of the European banks. Our Valerie actually did a great chart on this, looking at, you know, the pressure on some of the banks. And Christine, you were explaining, again, the extraction, okay, of some of these large banks. And we saw at Citigroup, I think, saying the exposure is $9 billion, is not as easy in terms of how this will play out over the next couple of days.
Absolutely, Francine. I think it's going to be an incredibly complicated process for these businesses to actually extricate themselves and expunge themselves from that Russia exposure, just because over the last few years, you know, the international system really has gotten very, very tied together. And so, yeah, now that they're trying to figure out this process, well and good that they're indicating this, but really the question is the mechanics of it all. And I think that's what investors are really trying to figure out at the moment, and hence quite a bit of confusion out there in the markets.
Thank you both for joining us. Bloomberg's Christina Aquino, our markets editor, and Andrew Pease, global head of investment strategy at Russell Investments, stays with us. And of course, Andrew, one of the key questions is also, are Russian markets now uninvestable? We'll talk a little bit about that later. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour, we also speak to the chair of Ukraine's largest commercial bank, Privat Bank's Sharon Isky joins us later this hour. Up next, we speak to the chief financial officer of Covestra after announcing a €500 million share buyback. Send in your questions on IB plus TV Go. This is Bloomberg.
U.S. has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Of course, the Moscow Stock Exchange is closed. It closed on Monday. It's going to be closed until March the 5th. So Russia, Belarus is uninvestable, clearly, at this point. It's not a time to panic. It's a time for calm heads, of course. And what we're seeing in the market is there's a flight to quality. There's actually a flight to scarcity. Think about energy. Think about food supplies.
Well, that was the chief executive of Aberdeen, Stephen Bird, saying that Russia is uninvestable. Later in the program, we'll be delving into the ongoing corporate exodus from Russia. And if you have any questions for us or any of our guests, just IB plus TV Go. You can also reach out on Twitter. Now, Covestro announces a €500 million share buyback. This as fourth quarter sales rise on higher prices. Well, Covestro's CFO, Thomas Töpfer, joins us. Mr. Töpfer, thank you so much for joining us. This is a German company, of course, which produces some of the polyethylene foams or some of the also high-performance plastic polycarbonates coatings and things like that. So you're extremely affected, Mr. Töpfer, by the price of oil and gas. How has the Russian invasion of Ukraine affected Covestro?
Yes, thank you very much for having us in the program. So let me first of all say 2021, and then I will talk about the current situation. But 2021 for us was a very successful year, and we've been virtually sold out over the entire year. And you've seen we were able to increase our sales by 50%. And the reason is because we were able to pass on energy prices already in the past year to our customers. And now to the situation in Ukraine, of course, we've carefully analyzed the situation. And the fact is, first of all, we're doing very little business in Ukraine, and we're doing virtually no business in Russia with significant...
Mr. Töpfer, yeah, I mean, the question was really on oil prices, because I understand it's important to also look back. But I imagine your world and actually the cost prices and the cost pressures for 2022 have changed for the foreseeable future.
Absolutely, and I was just going to come to that. So the immediate impact is low, but also the impact that we're seeing in the markets, and you alluded to that, we think can be mitigated, because currently we see that the markets were very volatile end of last week. That has normalized to some extent over the last couple of days. So we do think, yes, there will be an increase in prices in oil and also in energy, but it will most likely be something that will affect the entire industry. And we've proven in 2021, and this was why I was talking about the experience that we've made in that year, we as a company were able to pass that on to our customers and successfully maintain our profitability, simply because the demand for our products is so vital and so critical that this is something that we were able to generate. And we're expecting also that this will be the case for 2022.
So you think at this point, and actually my first question is, how much of your overall costs, production costs, are coming from energy at the moment?
Well, we have roughly $1 billion in energy costs. If you compare that to the total bill of raw materials that we have, that is in excess of $10 billion. That shows you that is about 10% of our input costs comes from energy. We've seen a significant increase in energy prices from roughly $500 million in 2020 to roughly $1 billion in 2021, so a doubling. But still, as I said, our results have also doubled because we were able to pass on those bills. And we are expecting that this number from the 1 billion of last year could go to as much as 1.5 in 2022, exactly because of the effects that you mentioned. Of course, the current geopolitical situation is putting pressure on prices.
And there is no doubt that you're able to actually pass on some of these consumers. I mean, we worry about inflation. How much are you expecting then your products to go up by?
Well, I mean, the prices for our products are really driven by supply and demand, and they have increased by more than 50% over the last year because of the demand for things like electric vehicles, for building insulation. The energy itself is not the biggest driver for the prices in our products. It is essentially something that, especially for the commoditized products, it is a price adjustment factor in our contracts. So it is, as I said, energy is not the biggest input factors for us as a company.
All right, thank you so much for joining us. Thomas Töpfer, there, the Chief Financial Officer at Covestro. Now, we're seeing a lot more pressure, of course, politically, but also these self-sanctions morally from a lot of energy companies deciding to get out of Russia. We saw it with BP. They were the first ones. We saw it with Shell. Now, TotalEnergies say they will send fuel to Ukrainian authorities and they will no longer provide capital for new projects in Russia. Now, this is not exactly what some of the investors were expecting, which is actually saying we will no longer do business in Russia. But it's, of course, a step in that direction, with Total saying they will no longer provide capital for new projects in Russia. At the same time, a lot of pressure is also mounting on Exxon, that also has very strong ties to Russia. Brent crude extends gain at the moment, rising as much as 3.8% in London. The focus will be on some of these strategic reserve releases and what that has as an impact longer and shorter term. Coming up, the chair of Privat Bank, Ukraine's largest commercial bank, Sharon Isky. She joins us for her insights into the challenges facing Ukraine. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
In London,
in Sydney,
in San Francisco,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
To recap the headlines.
You do not want to miss this
how
story.
are you thinking about those dynamics?
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's take a look at the corporates' reaction to the Ukraine invasion with our Danny Berger. Danny, what are you looking at today?
Francine, is this wave of self-sanctions we're seeing companies undergo. For many Western companies, they've decided they don't want to take either the reputational risk or the financial risk that comes along with doing operations in Russia. It's really a wide breadth of different industries. Oil and gas has been very closely watched. BP was one of the first to announce on Sunday that it would be getting rid of its stake in Rosneft. Shell also cutting back on its exposure as well. We heard from Maersk just an hour or so ago saying that they wouldn't be taking new bookings in Russia, concerned about safety as well as the financial impact. You have car dealers as well on the list, car makers rather. And again, a lot of it is, how do you even do business with banks cut off from SWIFT? Does the freezing of finances and the flow of financial assets also mean the freezing and flow of goods? So let me show you what some of the stocks are doing today. So along with Maersk, another company that announced a change in policy towards Russia was Total. So Total down 1%. They do have a stake in one of Russia's largest independent gas providers. They haven't announced anything on that, but they said they wouldn't be funding new projects in Russia. Will they get rid of that stake, that JV? How big of a hit will they have to take on it? That's something we've contemplated with Shell and BP as well, both of those declining, erasing earlier gains. And I would say, Francine, the other sector to watch is banking as well. We've had a number of banks announce that they wouldn't be financing funding of oil and gas and other commodities coming in and out of Russia. And again, there's the wider impact of, if you have missed payments from Russia, does that have an issue when it comes to funding stress for banks?
Yeah, I mean, so much, of course, crossovers, Danny, and the implications that still need to be played out. Our Danny Berger there with some of the energy stocks and a great roundup, of course, of some of the other things that we're watching. We're back with Andrew Pease, Global Head of Investment Strategy at Russell Investments. Andrew, did you have any exposure to Russia? Is Russia now completely uninvestable?
Well, Russia's going to have some challenges. Its economy is isolated. It's going to take a hit. They've got the risk of social unrest, but we do have some exposure. We're a broad asset manager. We have emerging markets exposure, and we continue to discuss with our sub-advisors there. And I don't think there's a clear consensus yet on what to do with Russian exposure. And given that the market's down nearly around about 50% since the conflict happened, people are very much in wait-and-see mode. I don't think really many people predicted the extent of this. This time last week, the consensus was that it would be a limited invasion of northern Ukraine. And this fuller invasion, I think, has really got people just waiting to see what happens and waiting until the fog starts to clear before making any really solid decisions about what to do with allocations.
Yeah, Andrew, and we have some actually great charts, and we also have the Gazprom depository receipt dropping some 25% in London. I mean, some of the great charts look at, the credits longer term and some of the implications there for Russia. I mean, Russian borrowers, of course, will need to figure out how they're going to pay about $9 billion over the next 3 months. Again, can this be contained?
Well, I think the central scenario is that it can be contained. Like, Russia as an investment market as part of MSCI World is not that large. So overall, the implications, there are some knock-on effects. We're seeing some concerns about financials. And I think what everyone is worried about, and what I tend to be worried about, is the tail risk, because in this event, the tails have high impact, but the tails are still low probability. And the tails, of course, are a broader conflict that involves a NATO country, which would be a worst case, almost impossible to contemplate scenario. And the other one is that energy gets affected directly, and that would certainly, we see oil prices and gas prices really spike much higher. And they're the really true serious scenarios. So the tails, high impact, but still at this stage look reasonably unlikely.
Andrew, thank you so much, as always. Andrew Pease, Global Head of Investment Strategy at Russell Investments. Just as a reminder, and size and scope, Russell Investment has about £245 billion in assets under management, so not a small player. Coming up, what's it like on the ground for Ukraine's bank customers? We'll be joined by the chair of Privat Bank, Ukraine's largest commercial bank. She's Sharon Iski. Send in your questions on IB plus TV Go. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Now, the fighting in Ukraine escalates despite ceasefire talks. The city of Kharkiv continues to suffer heavy shelling. The military aggression drives 500,000 Ukrainians to flee the country, according to the UN. Poland says it's received nearly 400,000 refugees. And Putin pushes back on sanctions while Moscow hardens capital controls and shuts Russian airspace. Jamie Dimon tells Bloomberg the SWIFT sanction may have unintended consequences. Also, stay with Bloomberg Surveillance Early Edition. This hour, we speak to the chair of Ukraine's largest commercial bank, Privatbank's Sharon Eski, sending your questions on IB plus TV Go. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, this is what the markets are doing. We're seeing a little bit of pressure across the board in some of the currencies, certainly not the haven bid that we saw over the last couple of days. The impact, of course, on sanctions further escalating is something that a lot of the markets are trying to watch out for. European stocks declining, apart from, I think, the FTSE, which is gaining some 0.2%, bonds gaining. Again, Ukraine fighting is intensifying, and the world is now asking whether there will be more penalties against Russia. The ruble stabilizing after its worst plunge on record on Monday, though the wide indicative bid-ask spread highlighted ongoing challenges. Also, we have some of the Russian stocks that we need to talk about that are in London. Because the market is closed in Russia, we have to look at what exactly is happening here in London. Sberbank, of course, down some 13%. I think when it opened, the depository receipt was down 25%. Gazprom down also a fifth of 8%. Now, heavy fighting is continuing to rage in Ukraine, with the country's second largest city, Kharkiv, coming under heavy Russian bombardment. Now, this as talks to secure a ceasefire and without agreement. Civilians continue to flee the fighting for safety in neighboring countries. EU ministers will be holding an emergency meeting later on in the growing refugee crisis on the borders with Ukraine. Now, President Putin has hit back with countermeasures in response to punishing Western sanctions. Russia has banned its residents from transferring hard currency abroad and blocked payments on external debt. Oil prices pushing higher as investors try to figure out the possible impact of a reported release of strategic crude reserves by the U.S. and its allies.
The energy trade is going to be disrupted. This is not going to be a smooth thing.
This is an enormous amount of oil that has the potential to be disrupted for potentially weeks.
If you start using the SPR early in the multi-year deficit, is shooting yourself in the foot. You need to keep that for the right reasons.
We've done that before. It really didn't make a huge impact, I think, over the long haul.
There's room, if needed, to put sanctions on Russian oil exports.
I think you're going to see in effect, a sanction on Russian energy just by the behavior of market actors.
We'll probably lose 3 million barrels a day of supply. This is an amount that the world can afford to lose to some extent.
Well, the JP Morgan chief executive, Jamie Dimon, also says there are ways around sanctions involving the SWIFT messaging system. He spoke exclusively to Bloomberg's Ed Hammond.
I'm going to defer American foreign policy to the American government. They're very smart. They got a lot of experts in national security and economic policy, and hopefully they're doing the right things to bring it to a conclusion quickly. And also, my heart goes out for Ukrainians. I mean, this is a humanitarian crisis for them. We're announcing later today some of the stuff we're going to try to do help there, and hopefully more to come.
Just talk to me quickly about SWIFT and what that means for the global banking industry, if indeed these sanctions that have been proposed are followed through.
Sorry, there's a little misinformation today. The government's going to decide how to use sanctions, how to use SWIFT. I don't want to bore your users. A sanction says I cannot do business with you. A SWIFT thing says I can't use a communication to do business with you. I can still do business with you. And there are a lot of workarounds on SWIFT. So there are different tools to be used for different reasons. And, the banks are talking to the government so everyone understands the issues, not because they're for or against any particular thing.
On the question
but these war doesn't always follow the path you want. Financial sanctions don't always follow the path you want. So people should be very thoughtful how they go about these things.
But the question of workarounds to SWIFT is a very important one, because that seems to be a concern, that if an alternative system is established and begins to get traction, that can present real risks to the sort of financial stability of the West.
Well, but remember, they can just stop us from doing it by telling us. A sanction is very targeted, very specific, very clean, and depending on how you apply it, you can apply that in multiple ways that you can't get around. There's no workaround in that kind of sanction, nor should there be. I'm an American patriot, and we're going to do what the American government tells us to do, and so I think people worried, I think they're more worried about the unintended consequences. What countries do you hurt? What people are going to do workarounds? How you fix that in the case you shouldn't. Remember, the government itself wants to have an open conduit, it looks like, for energy payments. So there are a whole bunch of issues they got to work through.
That was JP Morgan chief executive Jamie Dimon speaking exclusively to Bloomberg's Ed Hammond on Russian sanctions and the SWIFT messaging system. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Russia has barred airlines from the EU, Canada and other countries from its airspace in response to sanctions imposed for its invasion of Ukraine. Russia is a key route for travel between Europe and Asia, but it's now off limits for major carriers, including Air France and Lufthansa. Several airlines had already begun going around Russia or removing some flights from their schedules. Now Moscow has barred Russian residents from transferring hard currency abroad. The Bank of Russia later clarified the ban on providing FX loans to non-residents only affects new debt and doesn't impact servicing of existing loans. The Swiss government has broken with the long-held tradition of neutrality and agreed to enforce EU sanctions against Russian companies and individuals. The government's decision came after criticism by opposition politicians and editorials in leading Swiss papers, as well as by other governments. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, coming up, more on the war in Ukraine. As shelling continues, Putin announces countermeasures in response to crippling Western sanctions. We'll have plenty more on that. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, we have a headline that's crossing the Bloomberg terminal from IFX, the Russian national agency, saying Russia says it will continue the Ukraine operation until its goals are met. Now, this is a pretty horrible headline that no one really wanted to see, of course, as more aggression and some of these horrific pictures are coming up also on social media feeds. It will be up to world leaders to see how much harder they want to go on Russia and whether there's any deterrent possibility because of what we've seen in the last couple of days. Now, Privatbank is Ukraine's largest commercial bank with approximately 20 million customers. Sharon Eski is a chair of the supervisory board, is an expert in problem bank restructuring as part of the U.S. government's assistance to Ukraine. Sharon supported Ukraine's response to its 2014 financial crisis. Well, Privatbank was nationalized in 2016, and Sharon took on the role of chair in 2019. And Sharon Eski joins us now. Sharon, first of all of our thoughts, of course, are with the people in Ukraine who probably don't have access to cash here. I mean, the images of the war-torn country are really quite incredible to watch in the sixth day of invasion from Russia. What's the banking system looking like in Ukraine right now? Are any of your branches open?
Well, thank you very much for having me. It is really important that we have this opportunity to share what is going on the ground in Ukraine. To your specific question, the financial system, the infrastructure is actually quite resilient. Throughout Ukraine, the banking system continues to operate where it can. Branches are open. There are many places under fire, under attack, where this is not possible, or branches that are in locations that are currently under the control of Russian troops. But every day, there's an assessment by the central bank with the banks throughout the country where money can be deployed, where branches can open safely. And truly, the bank staff is working around the clock to keep essential services operational.
And Sharon, this is extremely important, of course, because even in war zones, people need access to cash to be able to buy the necessities to either, travel as refugees or just feed their families. How long, given the aggression of Russia at the moment, how long are you expecting this to stay open and support the financial system?
Again, they're assessing this on a day-by-day basis. When I checked with our bank management yesterday, we have an update meeting every day. As of yesterday, our bank branches that were open had cash that they could distribute. So about 50% of our branches, 700 of our branches were open and operating yesterday, and to the extent possible, that will continue to happen. Let me say, too, that the banking system is working. People, of course, are able to use cards, credit cards, payment terminals, where you swipe your card. Vendors are able to take on electronic transactions, and those are continuing to get processed through the system.
We've seen, for example, some of the ministers asking for help from certain private individuals in the U.S., including Elon Musk, who was able to support with Starlink quite quickly. What does the banking system and what does your bank need now from Western powers or Western privates?
Well, the needs of the country are well known. The government has done a very good job articulating the needs in terms of the banking system. It is going to get more complicated as I understand that last night more bridges in Kiev were destroyed in order to prevent the Russian troops or tanks coming in closer. And so, first of all, the military aid is essential. The humanitarian assistance I understand, is being put together and coordinated to the best it can be. A lot of effort on the ground and through countries, surrounding countries, to get what they can into Ukraine. So I think that really just stepping up and understanding the urgency of the situation is really what's needed.
Sharon, any cyber attacks that you've been trying to fend off because of foreign operatives?
Yes, sorry to talk over you, but you know that last week, Ukraine, some of the government agencies and many of the banks, including our bank, sustained one of the most massive cyber attacks in the history of Ukraine and maybe in the world. I'll just give you a sample that the number of financial transactions that we process in a minute is usually about 50,000. The attack was pushing faulty and fake transactions into the system in order to block legitimate work. It was 1 billion transactions a minute. So we were able to sustain that, and the cyber attacks since then have continued, but they're certainly not to that extent.
Sharon, how have you been communicating with people on the ground, including the government? How's morale?
You know, the Ukrainians are just an amazing group of people. I've been there for 8 years now. You know, another important message, and I think there's some perception this isn't the case, is that Ukraine has a vision. It has had a vision since 2014 of being a free and independent country. It wants to be, and it has been becoming, a legitimate player in the world, in the global economy. They are committed. They are fighting for their freedom. They have begun fighting in 2014. Their resolve is unshakable. The number of people that are helping them on the ground and have been helping them is extraordinary, and we want them to know that we continue to stand for them and to do what we can to, in any way, to provide support. But morale is good. It's scary on the ground. They are in a very difficult, tragic situation. They are living the atrocities of war every day. We have, just like the soldiers, people are showing up at the banks. Delivering cash is dangerous. Opening branches is dangerous. Opening the trains is dangerous. But people are staying at it to keep the country going.
Sharon, thank you so much for your time today. Sharon Isky, there, chair of the supervisory board at Ukraine's largest bank, Privat Bank, joining us this morning. Now, of course, the financial implications of freezing out Russia and the sanctions not only have an impact on a lot of the companies that decide to step out of Russia, but of course on the path forward for central bank normalization. Traders now delaying bets on the ECB 25 basis point rate hike to 2023 from December. So they were thinking that there would be that kind of hike in December. That's now been pushed back by a couple of months. And of course, the main question is also, we hear from Raphael Bostic a little bit later on today at a virtual event, what that means for the possibility of a rate hike this month from the Fed. Now, heavy fighting is continuing to rage in Ukraine, with the country's second largest city, Kharkiv, coming under heavy Russian bombardment. This as talks to secure a ceasefire and without agreement. So as the war escalates, President Putin has hit back with countermeasures in response to punishing Western sanctions. In the past minutes, Russia media has also reported that Moscow will continue its Ukraine operation. Joining us now is our senior reporter, Mark Champion, who writes on international affairs and was in Ukraine shortly before the invasion. Bloomberg's Nick Comfort also covers European finance regulation, and we'll talk about SWIFT and some of the sanctions. So let's start with Mark. Mark, Russia continuing the intensity of their invasion despite the West's sanction. How much further does this escalate?
Well, rather than continuing, they're increasing the intensity. So this began as a somewhat logistically challenged operation for the Russians. And on top of that, on some faulty assumptions about the level of resistance they would receive. So their strategy was really fairly light in terms of the kinds of equipment and people they were using. They were trying to make lightning strikes into cities and so on. It didn't work. And now they are really upping the tactics, and they're using a lot more artillery missile strikes in center of cities and really trying to encircle them and really fight the way that the Russian army is used to fighting, which is first with a lot of artillery and then they follow up.
Mark, what is the West, what's the West calculation? Will they escalate further sanctions towards Russia in the hope that they save Kiev?
Well, I think they've already sort of overperformed in terms of what people expected and what the Russians expected would be done in terms of sanctions. So there is some scope left, and that may come, but I don't expect it, immediately. No. Right now, for the Russians, I imagine the focus, at home is very much on the sanctions, but in Ukraine and for their campaign, it'll be about trying to get it done quickly enough before a lot of supplies of anti-tank weapons, anti-aircraft weapons, and so on start to make it into Ukraine, and to raise the cost for them of, every city they try to take.
Nick, talk to us a little bit about the impact of the sanctions so far. So what do we know about the banks being cut off from SWIFT? Again, because this is a messaging system, there's always a workaround.
Yes, exactly. This is the Gmail of global banking, so to speak. So we know that at least 5 banks will be cut off from SWIFT. That's based on from the information from the U.S. Treasury. We don't have a full, really detailed list of sort of who exactly from the European Union who will be cut off. And that's very relevant for banks here, for companies, because they will want to know sort of how they can move money. And the European Union is key here because SWIFT is based in Belgium, which means it's subject to the bloc's rules. But we do know, the 5 banks, Sberbank and VCB really stand out. They account for 50% of Russian banking assets. So they've gone after the big banks, certainly.
So what are the consequences for the Russian and global economy? And Nick, this could be escalated, or certainly the sanctions or the freezing off of SWIFT could apply to the whole Russian economy, not just these 5 sanctions banks. How bad would that be?
That would be very bad. But at the moment, the indications we have is that energy will be excluded. So payments for energy will still be possible. That means that Russian gas can still flow to Europe, Russian oil as well. And given the price rises we've seen, that's obviously a very sensitive topic for consumers here, but also in the United States. And it's the middle of the winter heating period. So exactly how that's going to be structured, that's going to be a really tough nut to crack, I'd say, for officials in Brussels and elsewhere. And then in terms of other companies, it's a huge blow because, if you want to be buying and paying for products and services, then you will be not be able to do so through the major banks. Maybe there will be another bank that can take your transaction, but finding just the sheer doability of that at the moment will be very difficult because of the number of orders flooding through, but also the reticence of banks elsewhere in the world to deal with Russia.
All right, thank you both for joining us. Bloomberg's Nick Comfort and Mark Champion as well. Coming up, the Ukraine crisis has whipsawed oil prices, so could a release of crude reserves by the U.S. and its allies reduce the volatility? More on that next, and this is Bloomberg.
variant and the latest wave have an impact on not only consumer trends, but your business? And do you expect the booster shots to make a difference?
Yeah, booster shot will make a huge difference. I think it's been accelerated by the huge leadership of the current Prime Minister Kishida. And I'm hopeful that our business will come back in Japan around perhaps mid-February to end of February, because we expect that a peak time will come around that time. And then the government will shift toward the reinvigoration of consumer. That will help us. And we had seen the huge comeback of the business in December when the things were toward the normalization. So I believe the business will come back, and I'm very much hopeful.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, oil prices pushing higher as investors try to figure out the possible impact of a reported release of strategic crude reserves by the U.S. and its allies. Now, traders say that Chinese companies are expected to scoop up discounted Russian oil should sanctions deter other buyers. Well, joining us now is our Bloomberg executive editor for commodities and energy, Will Kennedy. So how much of an impact do you think the release of strategic reserve is likely to have on the price of oil?
Think of it as already having oil, Francine. In the immediate aftermath of the invasion, we quickly went to $106 in the Brent benchmark, and we're back down at 100. And I think that reflects two things. One, the fact that the sanctions did carve out provisions for oil exports from Russia to continue, but also that traders do expect this action coordinated by the US through the International Energy Agency to release about 60 million barrels of oil at some point soon. And it's helping to keep a lid on prices.
Well, is China just going to buy more oil from Russia?
Well, that's a little unclear at the moment. I think in the last few days we've seen a fair amount of chaos in the actual physical oil markets where people buy and sell oil. It's been unclear. People are trying to work through what the sanctions mean exactly, because there are sanctions on a lot of the banks that are involved in commodities trading, and that process is still working through. But ultimately, I think there'll be a lot of buyers in the West that won't, and some of that China,
Thank you so much.
Some of that oil.
Our Will Kennedy there.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think we're all trying to figure out what's going on now, and it's very hard, if not impossible, to predict what Vladimir Putin's going to do.
I think that there was a sense in Moscow that this was going to be easier than it actually has been.
Putin, one of his major games was to break NATO, to weaken NATO. He's done just the opposite. He's brought it together.
Look to see more companies announce their exits from Russia in the coming days.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong on this Tuesday, March the 1st. Our top stories today. Russia steps up the shelling of key cities in Ukraine overnight. Meanwhile, ground troops are closing in on the Ukrainian capital, Kyiv. President Biden will highlight the bravery of Ukrainian defenders in the State of the Union address tonight. He'll also stress the importance of the U.S. as a global leader. And companies from Shell to Daimler are pulling out of Russia. That reverses 3 decades of investment that began with the collapse of the Soviet Union in 1991. Welcome to Bloomberg Surveillance, everybody. This is the Early Edition. I'm Anna Edwards in London, Matt Miller and Kaylee Lines in New York. And from where I am here in Europe, Kaylee, of course, we're still focused on everything that's happening day in, day out, day 5, day 4, day 5, day 6 into the Ukrainian invasion. Markets in amongst all of that losing their footing.
Yeah, at least they've rolled over in Western markets, Anna. It actually was still a pretty positive session in Asia overnight. Broadly, the MSCI Asia Pacific Index was up by about 0.6%. One of the outperformers within that was actually Japanese equities, the Nikkei 225, higher by more than 1 full percentage point. What's interesting is that may have been aided by what was a weaker Japanese yen earlier in the session, but as that FX session has grown older, as things have gotten more risk off in Western markets, you're starting to see that haven bid coming back into the yen. It is now stronger against the US dollar by around 0.2%. We are just south of 115, 114.79 is where we trade at the moment. The other factor I wanted to point out was the PMI data we got out of China. Those manufacturing PMIs for February coming in stronger than expected. That raises the probability of better demand for iron ore. And as a result, you saw iron ore futures in Singapore up about 5 percentage points, Matt. They are trading just underneath that $150 a ton level.
Yeah, big bid for commodity
commodities today. Futures are down this morning as we head towards the U.S. Open, off about 0.5%. We had gains at one point yesterday during the live cash session, but then closed down, of course, at the end of the day. There is a bid for the U.S. 10-year pushing the yield down to 1.8044. So investors looking for the safety of treasuries. Also, in some senses, the safety of oil. You can see NYMEX crude right now. This is Texas Intermediate at $99.04. So don't be confused. You're not looking at Brent. We're almost 100 here on the NYMEX. Bitcoin up 4% to 43,292. Again, the narrative continues to be, Anna, that Russians looking for any place to put their assets other than the ruble are going, at least in part, to digital currencies.
Yeah, and is there anything that Western governments can do about that? We will talk to a Treasury Minister later on in the program and ask just that. This is what we're seeing on European equity markets right now. These markets down in the south of Europe, they were actually in positive territory at the start of the trading day, but now we're down by 1.8% on the FTSE MIB, for example, over in Italy. It's a little bit of a copy of yesterday in terms of the sectors in focus. So defense stocks, they're moving to the upside on expectations of more spending on defense by European governments. We also see some of the gambling companies moving a little lower. Exposure to Russia appears to be one of the themes that the market is trading on there. Let me show you some of the other assets in focus today. We've got the basic resources sector pulled out here, up by 0.4%. This remains one of the bright spots, one of the only sectors in London, in Europe that is in positive territory, many of them listed in London, but not all London miners are moving higher. Polymetal, for example, a Russian mining business, also has a listed in London. It was down heavily yesterday, down 80% year to date for that kind of business. Brent crude is here then, Matt. You talked about where we were on the WTI price. We're at 102.21 on Brent crude, 4.3% to the upside. If that's confusing, that's because we saw a big drop in those oil prices in the latter part of yesterday's trading day. So even that upside only takes us to 102. And the big story here really is what we're going to hear from OPEC middle of the week and what we're going to see from Western governments in terms of that strategic petroleum reserve, what kind of release there. I put in here, this is the Bloomberg Agricultural Index. And so this is tracking agricultural prices. This is another theme we need to not lose sight of as we talk a lot about these kinds of commodities, oil and gas, not losing sight of this. How much are wheat exports going to be disrupted, of course, from Russia and from Ukraine, and who stands to pick up some of that market? And here we have the Russian ruble. I put this in here because 3.7% is not a big move in recent history. But of course, we're seeing a disconnect between what is going on the offshore market. This, I think, is the offshore ruble, and what's going on onshore. We've seen capital controls, of course, introduced, Kaylee, and that is a factor. And as you see that taking hold, you then get that divergence in how the ruble trades in different parts of the world.
Yeah, very, very thin liquidity. Those bid-ask spreads quite wide. Anna, we will continue to watch the ruble throughout today's session. And as for what else we will be watching in the day ahead, Atlanta Fed President Raphael Bostic will take part in a moderated virtual discussion at 2 p.m. New York time. Traders, of course, will be looking for clues on the size of this month's expected rate hike. Then OPEC Plus will be meeting via video conference to discuss Ukraine-Russia risks and progress toward a renewed Iran nuclear deal. We were just getting headlines out of OPEC that it sees a smaller oil surplus this year than previously expected. On the U.S. economic and corporate earnings front, we will get U.S. retail earnings from Target, Nordstrom, and Kroger. And then finally, the big event tonight, President Joe Biden will make his first State of the Union address at 9 p.m. New York time. You can bet, Matt, that Russia and Ukraine are going to be front and center of that agenda.
Yeah, absolutely. He will also talk about inflation on the domestic front. But of course, the Russian shelling of Ukraine has escalated overnight. Troops on the ground are moving slowly in a large convoy, and I mean large, towards the capital, Kiev. We've heard reports that it's a 40-mile convoy. Interfax says Russian armed forces will continue their military operation in Ukraine, the attack, until they meet their goals. For more, we're joined by Rosalind Matheson, Bloomberg International Government Executive Editor. Roz, what are the goals? I mean, do they simply want to install a pro-Moscow government? I mean, that's not even a simple task. What is this military operation aiming to achieve?
Well, from the outset, the Russian president has said that he wants to make sure that Ukraine becomes much more of a neutral country, and that to him seems to be regime change. He really wants the government that's in there now, and he wants the Ukraine military, rather, to come much more under Russian control. So does that extend to Ukraine essentially becoming part of Russia? Does it become governed by a pro-Russian administration? Does he carve up Ukraine in some fashion? Because certainly, at least in Western Ukraine, they're very pro-European, more so than that. So his ultimate goals are still some version of that, despite the fact that he's entertaining talks that have occurred on the Belarus border in recent days. He really just wants to see total control by Russia come onto Ukraine either way.
And so do we have low expectations for what any of these talks can achieve then, Rosalind? Because at the same time, we see the presidents of 8 Eastern European countries, EU members, sending an open letter to the bloc calling for it to immediately grant an accession path to Ukraine. So Ukraine's still trying to join the EU at the same time as President Putin sees a very different path for the country. It doesn't seem likely that talks can result in a compromise if that's the opening positions.
Well, that's right, and the differences between them are just too enormous to see any kind of pathway to an agreement. There were those talks that occurred, but now they've returned to their capitals to consider whether and when they want to go back for a further round. But meanwhile, this conflict continues unabated on the ground. And as you say, for Ukraine, it's really a question of them wanting to be much more in the embrace of Europe, be it the European Union or NATO, whatever. And that's just something that the Russian president won't tolerate. So what common ground you can find between those two positions is very difficult to see at this point in time.
Rosalind, thank you very much. Rosalind Matheson, Bloomberg International Government Executive Editor. Now, let's talk about what's coming up in the Washington agenda today. Meanwhile, in Washington, Democratic Senator Joe Manchin wants the Biden administration to encourage more domestic energy production. Manchin says it's ridiculous that the U.S. buys oil from Russia, and he's planning weeks of hearings on energy independence. Emily Wilkins, Bloomberg government reporter, joins us now from D.C. How much backing will he get for this kind of call, then, Emily?
Well, let's remember here that even though we do treat Senator Joe Manchin like a second president here around Washington just because of the power he holds in this 50-50 Senate, he is in fact the chairman of the House Natural Resources Committee, which gives him a good amount of power in what hearings are going to be held, what topics are going to be explored, what legislation is going to be brought up. So this is an area where Manchin does have, even more than usual, a good bit of power. And we are seeing that this coincides with calls that the U.S. and other countries do have a plan to release 60 million barrels of oil from their strategic reserves. That could be about 30 million barrels from the U.S. That is, of course, in response to both rising gas prices as well as how that's going to be impacted by the Russian invasion on Ukraine. I mean, at this point, the Biden administration has tried to not really hit Russia's energy sector, but you are hearing from some lawmakers, including Manchin, that they think that is something that the Biden administration should be looking into because they believe it will really deliver a lot of pain to Russia's economy.
So, Emily, when President Biden addresses Congress and the nation tonight, how does he walk the line between toughness on Russia as it comes to Ukraine and the inflationary pressures that Americans are feeling at the gas pump?
So it's going to be a bit of a long speech. It normally is. And so we know that Biden's going to hit on a number of different topics. Certainly going to be talking about Ukraine, about what he sees as the bravery of Ukrainian citizens, as well as the need for the U.S. to protect democracy abroad. But of course, he does have to address those domestic policies, not just inflation, but also and rising prices, but also talking a little bit about his legislation. Now, we've heard from some lawmakers who are hoping that he pushes components of that so-called Build Back Better bill. Lawmakers say they want to discuss things such as healthcare, such as climate. And a lot of this comes into framing. We know that President Biden from the White House is going to be trying to talk about climate in terms of what that saves for American families, not just in terms of needing to go green, but in terms of needing to really help stimulate the economy.
Emily, thank you. Emily Wilkins of Bloomberg Government. And don't miss our coverage of President Biden's State of the Union address. That starts at 8:30 p.m. in New York, 1:30 a.m. in London. Now, JP Morgan CEO Jamie Dimon weighed in on the SWIFT sanctions on Russia in an exclusive interview with Bloomberg.
War doesn't always follow the path you want. I think people worried, they're more worried about SWIFT about the unintended consequences. What countries you hurt, what people are going to do workarounds. how you fix that in the case you shouldn't. Remember, the government itself wants to have an open conduit, it looks like, for energy payments. So there are a whole bunch of issues they got to work through.
Jamie Dimon there talking about unintended consequences. Meanwhile, one consequence of the invasion of Ukraine is foreign firms exiting Russia. This reverses 3 decades of investment that followed the 1991 collapse of the Soviet Union. Let's get more with Bloomberg's Danny Berger. And Danny, the list just keeps getting longer.
It does. It gets longer. It expands to different industries. It really is this self-regulation of fear of financial risks and reputational risks. So you have everyone from car makers and motor makers like Harley-Davidson, Daimler, halting operation businesses in the country. You heard from AP Moller-Maersk, one of the biggest shipping companies, just an hour or so ago saying that they would stop taking new bookings from Russia. It's this fear of safety and any sort of stability going through the region. Now, oil and gas is a really fascinating one. We also had Total today saying that they wouldn't have new investments in Russia. There's still no news on a large stake they have in a Russian oil and gas company. But elsewhere, we've seen Shell, for example, BP was one of the first saying that they wouldn't continue on. They'd get rid of these assets. Now, banking is also the other sector to watch when it comes how companies operate. Even though there's this carve out for gas, for oil, when it comes to Russia, you still have banks who are uncertain with how to operate there. There's a lot of unknowns. So Credit Suisse and SocGen, both of them have stopped the funding for commodities trading when it comes to Russia, oil and gas. ING and Rabobank, both of them have restricted lending in the Russian oil and gas space. So again, even though there aren't direct sanctions, Matt, it is this unknowingness, will there be more sanctions, and just trying to figure out how business operates, again, with a lot of Russian banks cut off from the SWIFT messaging system.
You know what? I have so many questions on this story, like who's going to buy these stakes, right? Nobody wants to buy Russian assets right now. Who's going to sell them? You can't just take a multi-million-dollar stake outside and sell it to your neighbor, right? You need an intermediary, and no one's going to do that. And then also, why do we keep saying Daimler? They changed their name officially on February 1st to Mercedes-Benz Group, but everyone continues to say Daimler. Absolutely. Listen, in terms of Bitcoin, this is where it gets even more complicated because a lot of Russians, you know, maybe trying to turn ruble into digital currency, and now the U.S. has asked at least some Bitcoin exchanges to try and stop those transactions.
Yeah, and I should say Vice reporting that Binance, one of the exchanges, saying that it goes against really what crypto was created for, to block access from anyone from crypto itself. But that idea, Matt, has meant that Bitcoin has gained 10.5% over the past 2 days. That perhaps it's not just Russians, but perhaps those in Ukraine who are having difficulty accessing traditional banking might be going into crypto. So this is the best 2-day rally since October. But one thing to keep in mind with crypto is because it's so sentiment driven, it's a chicken or egg sort of thing. Is this actually happening in Russia or Ukraine, or is it just the speculation of that is helping to boost Bitcoin higher?
All right, Bloomberg's Danny Berger, thank you so much. And that move in Bitcoin is boosting crypto-related stocks in pre-market trading here in the U.S., but there are a number of other stocks moving to the downside. Lucid Motors is one of them. This is, of course, the EV maker. It cut its production outlook for the year thanks to what it's calling extraordinary supply chain pressures, commodity costs as well, weighing heavily on that company. That stock is down nearly 13 percentage points in early hours. Another stock moving to the downside is Novavax, of course, the COVID-19 vaccine maker. It reported after the bell a loss more than double what analysts were expecting. So that outshining or outweighing some of the better vaccine efficacy data. That stock is down more than 7% before the bell. And finally, also moving to the downside is Zoom Video, what we all have been using all pandemic, but their sales growth forecast for the current quarter came up short, raises questions about what the post-pandemic future looks like for Zoom. That stock down the better part of 5 percentage points before the bell, Anna.
Yeah, I feel like it's almost become a verb, Kaylee, but that not protecting the stock from the downside. Right, coming up on this program, we will assess the market impacts of the war in Ukraine with Viraj Patel, global macro strategist at Vanda Research. We'll get his perspective on what this does to FX markets. FX markets seeing some dollar strength this morning as risk aversion takes center stage once again. And in a preview of Biden's State of the Union address, we will talk to Julie Norman, co-director of the UCL Center on U.S. Politics. Plus, UK Economic Secretary to the Treasury, John Glenn, will join us. We'll ask how welcome Russian entities are in London now. This is Bloomberg.
This chip shortage is going to last longer than many people believe, likely straight through this year. And I wonder what that means for prices. Will this get worse before it gets better?
I don't know that it will get worse before it gets better, but there's no reason to believe it's going to get meaningfully better anytime soon. The Commerce Department put that data out yesterday, and what it showed is that there's a real shortage. Demand is 20% higher than it was a couple of years ago. There's a huge mismatch in supply and demand. Prices are high. Prices are higher. So what has to happen is we need to make more chips. Unfortunately, there's no easy solution. The solution is increased domestic manufacturing of chips, which is what we need to do.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Tuesday night, March 1st.
We are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open.
Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins Tuesday night at 8:30 Eastern.
Of course, the Moscow Stock Exchange is closed. It closed on Monday. It's going to be closed until March the 5th. So Russia, Belarus is uninvestable, clearly, at this point. It's not a time to panic. It's a time for calm heads, of course. And what we're seeing in the market is there's a flight to quality. There's actually a flight to scarcity. Think about energy. Think about food supplies.
CEO of Aberdeen there, Stephen Bird, speaking earlier on Bloomberg Television. Joining us now is Christine Aquino, who helps lead our markets coverage. And Christine, we're hearing so much about Russian asset sales today, but there's no one there to do the sales or to buy the assets. We're seeing headlines like Russian markets are looking uninvestable. Aren't they already pretty uninvestable?
Well, Matt, that's definitely what we're hearing on the ground, and you're absolutely right. There's a lot of interest to offload Russian assets, but there's no one on the other end that's really willing to buy them. But that's really interesting, though, because, now we're kind of seeing investors coming out and saying Russia is uninvestable, but just a mere 8 weeks ago, closer to the start of this year, Russia was still being hailed as one of the investors' favorite destinations, particularly in emerging markets, I think primarily because of its ability to get ahead of that inflation story with its multiple rate hikes that we saw in the past year. But how quickly things have changed.
Yeah, how quickly things have changed, and people perhaps wanted some of that higher upside to oil prices exposure. Well, now we see that, but that's not the whole Russia story, as we know. What about other commodities then, Christine? I was looking earlier at the Bloomberg Agricultural Sub-Index, up at 2014 lows, so creeping up there, or in fact jumping up there. And I was talking to one guest who was telling me, look, this is pushing the Australian dollar up, and other countries, that rival for wheat exports. I mean, this is having an impact globally.
Absolutely, Anna. And I think this will be the next installment in this whole saga. What really this means for very important commodities, not just oil and gas, but food. This is something I think that's getting less focused because of everything that's happening. But it is a very important topic. Again, reminder that Ukraine is the breadbasket of the world, and any potential disruption to supply from that country is definitely going to create a lot of food anxiety.
Yeah, certainly talking about grains. Christine, thank you very much. Bloomberg Christine Aquino. For the latest market analysis, check out MLIV Go. That is the function to use on your terminal. This is Bloomberg.
What do you think is the impact of the Prime Minister on the market?
As Mr. Suzuki, who is the Financial Services Minister, he mentioned at his own press conference, and share buybacks is widely used to return profits to shareholders and improve ROE. And how to share out the profits from growth is, totally the decision of the management of each company after carefully taking, all the stakeholders into consideration. And I believe Mr. Kishida has a quite cautious stance on the uniform regulation of share buybacks. And I think because he is giving a consideration to each company's, individual circumstance and, decisions.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
As a company grows, there are more challenges. What do you worry about the most?
The market opportunity for us is enormous, and so our challenge is to continue innovating, driving, and pushing ourselves every single day to go after the most attractive profit pools in this incredible global beauty and wellness market.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Now, keeping you up to date with news from around the world, here's the first word. China's economy gained momentum in February, and a sign pro-growth policies have started to kick in. The official Purchasing Managers Index rose above the 50 level, the line that separates expansion from contraction. New orders placed at Chinese manufacturers picked up. And in Hong Kong, there will reportedly be a lockdown to ensure a mandatory coronavirus testing drive this month is effective. That's according to local news media. Reports say officials will test the whole city 3 times over 9 days. In the last few weeks, the number of COVID cases in Hong Kong has ballooned from a few hundred a day to more than 34,000 on Monday. But of course, it is no longer the pandemic that is capturing the focus of the markets. It is instead the geopolitical tensions at play between Russia and Ukraine. We'll talk about the market impact, the macroeconomic impact with Viraj Patel, global macro strategist at Vanda Research. This is Bloomberg.
Estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar.
y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Russia stepped up shelling of key cities in Ukraine overnight. The mayor of the country's second largest city, Kharkiv, says residential areas are being bombed. Meanwhile, Russian ground troops were slowly moving in a large convoy toward the Ukrainian capital, Kyiv. Interfax reports that Russian armed forces will continue their, quote, military operation in Ukraine until they meet their goals. The White House had to shift gears for President Biden's State of the Union address tonight. The president will now highlight the Russian invasion of Ukraine and what he calls nuclear saber-rattling by Vladimir Putin. Originally, the president was going to focus on the improving coronavirus outlook and rebrand his domestic policy priorities. And foreign companies from Shell to Daimler Trucks are abandoning Russia. That's reversing 3 decades of investment by businesses since the collapse of the Soviet Union in 1991. Some Western companies have concluded that the risks, both reputational and maybe financial, are just too great to continue. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. We continue to focus on the situation on the ground, the fighting itself, and the flow of refugees. Matt, that's the focus for us geopolitically, of course. In terms of where the markets are right now, we saw European markets losing their footing very early on in the session this morning.
Yeah, and we saw, U.S. markets close down yesterday in the cash trade. Not a huge drop, I think about 0.25% for the S&P 500, but we do see futures down again today and getting worse over the last half hour, so now down 0.8%. Investors are piling into treasuries, buying U.S. government bonds, pushing the yield down right now, 175.31, and it was 180 when we started the show 30 minutes ago. NYMEX crude trading at about $99 a barrel still. This is West Texas Intermediate, 98.67. Brent is still up well over $100 a barrel, so there's real concern about supplies there as everyone kind of stocks up, including Europeans who continue to buy oil and gas from Russia at these elevated prices. And Bitcoin up 3.5%, 43,145. The narrative is, or the idea is, that Russians may be wanting to trade rubles for digital currencies the same way that countries, the people in countries that have suffered hyperinflation have done in the past. I'm not sure if that's exactly what's happening. Maybe people just think it's going to happen and are buying it ahead of the trade. But that's what we see in terms of the move, for sure, Bitcoin getting pricier. What do you see in terms of pre-market moves, Kaylee?
Well, this is tied to the fact that Bitcoin is moving higher. A lot of crypto-related stocks are also getting a little bit of a lift here in early hours, like the Marathon Digital and Riot Blockchain. They're up about 3% and 2%, respectively. There's a lot of movers to the downside, though, and it's not just about the macro picture. It's also some micro-idiosyncratic stories, like with Lucid Motors, the EV maker. It cut its production forecast for the year, citing extraordinary pressures on the supply chain and logistics. That stock is down more than 13%. And you also have Zoom Video moving to the downside. The post-pandemic future is really what is in question here, as their first quarter sales guidance comes up short. So that stock is down about 4.5% before the bell, Anna.
Yeah, so that's the situation over in the United States. Here in Europe, Kaylee, we have European equity markets moving to the downside. I've got the US board here, but when we show you the European board, there we go. Stocks Europe 600 at 1.8% to the downside. So the losses here in Europe really ramping up as we go through this morning's session. This is the basic resources sector. Fairly flat, actually, now. It was one area of brightness, if you like, just one sector that was in positive territory earlier on. Kaylee, Matt, you were talking about what we're seeing on the treasury markets and how quickly we're seeing those yields drop. Well, interesting to keep an eye on what's going on the German Bund, the 10-year. Will it go negative again? It seems just not all that long ago we were highlighting how those yield stories were moving to the upside. We're getting out of negative territory on German Bunds, but now it looks as if we could be heading back into negative. We'll keep an eye on that. The Brent price, 101.50, up 3.6%. The big question here is around strategic petroleum reserves. What kind of release will we get? How coordinated across Western markets? What will OPEC do this week? OPEC Plus, in fact, including Russia in the mix, interestingly. This is the ruble. We see a disconnect now between what's going on the onshore ruble and the offshore ruble, this perhaps the offshore market, but we are seeing a little bit more calmness than compared to yesterday, but still these two disconnecting as Russia imposes capital controls, Kaylee.
And of course, it's all in a consequence of Russia's invasion of Ukraine, and it too is changing the outlook on inflation and the Fed. Man Group CEO Luke Ellis weighed in earlier.
I think that the very clear thing is that this is inflationary. It's probably stagflationary. It depends which economy you're in. But, you know, if you look at the US, it's clearly inflationary. It's inflationary on the energy side. It's inflationary, particularly on the agricultural side. And I don't think the Fed is able to step back very much. Maybe they'll do 25 rather than 50 this first time. But they're going to have to keep raising rates and raise them materially. They're going to have to get on with QT. And I think the bond market is really not reflecting that today.
Let's talk more about this. Viraj Patel, global macro strategist at Vanda Research, is joining us now. He is on set with Matt and I here in New York, which is very exciting. Viraj, when you hear those comments from Luke Ellis, I want to contrast them with what we heard from Marko Kolanovic over at JP Morgan, who essentially said that the crisis in Ukraine means the Fed is going to have to be less aggressive. Where do you come down in terms of what the geopolitical situation means for the trajectory of monetary policy?
Yeah, this trade-off between geopolitics and inflation is wreaking havoc across markets. Really, investors are, and including ourselves, are really trying to understand which side of this growth inflation coin will central banks land on. Now, look, I think the policy responses will end up being probably different in what you see in the US versus Europe. Europe, the narrative is stagflation. We think that's fairly crowded now. You know, the real risk is this: does this stagflation turn into deflation? You know, that negative growth shock coming through. We're going to hear the ECB talking about this next week. They've modeled the scenarios. That worst case scenario could be potentially, damaging to the Eurozone economy. So the only way to think about this is through the prism of financial conditions. And so in that sense, the ECB tightening rates here would be exacerbating some of the financial stress that's happening in European financial markets. So, we think that trade, being dovish on the ECB, waiting, playing that wait and see game around rate hikes, for us makes much sense. We've been doves for the start of the year. This is just another reason for that.
What about the Fed? I mean, the financial conditions picture has worsened materially. You can see it on the Bloomberg with FCON Go. Is the Fed still going to go through with a rate hike in March, maybe even a rate hike at most of the meetings through the end of the year?
Most likely in terms of March, I think that's probably clear. Definitely a couple of front-loaded. The difference really is the breadth of inflation in the US. This is another tipping point that takes the energy into sort of broader base. You've got stronger evidence of your second round effects in the US spilling through into the rest of the basket. That's not happening in Europe. Certainly, in what we look at, there's no evidence of a wage price spiral. There's no real clear evidence of second round effects. Yes, the only component in Europe is the supply shock. So, I think there's going to be a difference of responses here, and the Fed, has ammunition to really get a couple of hikes done this year.
Viraj, good morning from London. I mean, how low does this keep yields then? Matt was just talking about the deterioration or the drop we've seen in yields in the last half hour or so in markets, and I was talking about whether we go negative on German 10 years. How low does this keep? How in check does this keep those yields?
Positioning in the bond market has been very one-sided. Let's take the bunds, for example. We've seen a massive build-up of shorts over the past couple of months, really playing this whole, ECB tightening story, inflation story. These shorts look massively offside now. So, last week we saw the biggest weekly build in long positions in the bond market. We hadn't seen that since May 21, and we recall what we saw last summer. The sort of Delta playbook, a real dovish repricing, yields grinding lower. I really think that could happen in the European bond market now.
Well, and obviously that's part of a broader haven trade we have seen. Where can you still find safety that's not crowded?
Yeah, I think, the FX space is really interesting. Obviously, the dollar is going to be, the haven in a financial crisis. But there are probably better havens out there, like the yen and the Swiss franc. If this, as I said, geopolitical crisis deepens, this is not.
They just seemed to pick it up yesterday. They didn't get a bid.
And I think that's partly because of the financial element. But if we see broader cross-border repatriation flows, over a sustained period of a couple of months, because this crisis isn't going to go away in a week, right? Like if this could happen for months, quarters, years. So, that's the trade for us, we think, in the FX space. The other trade has really just been long energy exporters versus short energy importers. We would avoid European currencies at all costs in this because, this is a negative supply shock on par, if not worse, than what we saw with Brexit and the pound. So, basically avoiding European currencies.
Wow.
We see the euro weaker again this morning. Viraj Patel of Vanda Research, thank you very much for joining us. And of course, Eastern European currencies also being hit more so in a number of cases. Now, coming up on this program, UK Economic Secretary to the Treasury, John Glenn, will talk about the sanctions environment that's been put in place around Russia by the UK in conjunction with allies, of course. But what is the UK exactly doing here? And Julie Norman, co-director of the UCL Centre on US Politics, will talk about the State of the Union address. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. Now, Russia says it will continue its military operation, that's another word for its attack, in Ukraine until its goals are met, as its troops move slowly in a very large convoy towards the capital, Kiev. Let's get the latest with our European correspondent, Maria Tadeo, who joins us out of Warsaw. And Maria, what do we know, first of all, about the force? The BBC has reported it's a 40-mile-long convoy that Russia is moving into Ukraine. As you know, the Europeans are giving Ukraine, I think, $450 million worth of assistance, whereas the Russians sell $4.4 billion of oil and gas a day.
Yeah, but remember, Matt, this facility that the European Union has put on place is the beginning of it. Just 3 days ago, the European Union said that they weren't going to supply weapons to Ukraine. They're now doing it. And in fact, my contact in Brussels suggesting the severity, the brutality of the attack that we saw yesterday is probably going to change the conversation in Brussels as to what do we sanction next and how do we go bigger on this. And one of the leading figures in this is, of course, the Polish Prime Minister Morawiecki, who has been incredibly hardline on the Russians, saying we're Eastern Europeans, we know how the Russians operate, please listen to us. Today he's going to be speaking with Boris Johnson here in Warsaw, where we are, and then he's going to Brussels to speak with Ursula von der Leyen. I guess a lot of this will have to do with what is the next stage here. It is clear that, at least for the time being, the actions taken by the United States, the European Union, but also the UK, which has been pretty active on this, I should note, too, are not serving as a deterrent. I also had another source telling me yesterday from Ukraine that this was, in his view, and this is his real life firsthand experience, that yesterday was the toughest night. What we're seeing as these attacks are going incrementally bigger, and that is now an incredibly concerning for the Europeans, especially when you look that civilian lives are, of course, on the line now. This is not just military points at this point.
And we know that you're there in Poland, Maria, and we know that 377,400 people have crossed from Ukraine into Poland just since last Thursday, and that is just on that particular border crossing between Ukraine and Poland. Of course, some going to other European countries as well. Maria, thank you very much for the update. Maria Tadeo with us there from Warsaw. So in response to Russia's invasion of Ukraine, the UK government has introduced sanctions along with Western allies. In its latest move today, the UK government will present its economic crimes bill to Parliament. The aim is to crack down on foreign money laundering that uses the UK property market. I'm pleased to say John Glenn, UK Economic Secretary to the Treasury, joins us now. Very good to have you with us today to talk about this. I wonder if you're concerned at all that we will just see innovation to the fore and those with something to hide might continue to innovate to keep their identities hidden, and you won't be able to maybe get a firm handle on who owns what in the UK property market.
Well, they can try, but what we've done is, from the start, taken a very strong and uncompromising position. This is the largest set of sanctions ever issued against a major country, and we're determined to make it as effective and as broad as possible. So the announcements we've made on the register of overseas entities and the beneficial ownership of those entities is something that we're taking through Parliament urgently, and we will be looking at all ways to ensure that it can't be something that individuals or entities can get around.
I think that something in this document suggests that maybe you'll have the powers to seize crypto assets. So is this something that the Treasury is concerned about, that some Russians might try to get around sanctions by using crypto assets? What exactly can you do on that front?
Well, throughout, we've been working across the G7 with the US and with our friends in Europe and the Western world to make sure that these interventions are as comprehensive as possible, and that will involve looking at asset classes across the economy. And we've put a range of measures in already, and we will continue to work with our allies to make sure that they're effective across other methods that people may try and use. So we will continue to intensify our efforts, as the Prime Minister said in Poland just an hour ago, as we work in a coordinated way to make sure there's nowhere that these individuals and entities can hide.
Mr. Secretary, I was just talking with our reporter on the ground in Warsaw, Maria Tadeo, about the amount of aid, weapons aid, being given from the EU to Ukraine. It seems incredibly small, denominated in millions rather than billions, especially considering the fact that we give Vladimir Putin billions of dollars a week for his oil and gas exports. In fact, it amounts to about $230 billion last year, and that number is going to be much higher now at these prices. Is it all right to continue buying things from Vladimir Putin, financing, in effect, his war effort?
Well, I think the measures we've taken in terms of shutting major Russian banks out of the banking system, putting significant restrictions on the way that the Russian central bank reserves can be used and the way they can interact, Look, we've seen the enormous impact on the stock market, massive fall in stock values. We've seen the impact on the value of the ruble. We've seen unprecedented falls in the state of the economy, doubling of interest rates to 20% in Russia. I don't think these interventions are insignificant. Of course, there are significant challenges with energy. Those things can't be changed overnight, but I think the determination and the range of interventions that the British government has put up with its allies has been considerable, and the impact has been felt in those measures that I've mentioned.
Mr. Secretary, you mentioned the sanctions on Russian banks. Do you see a future for Russian banks, the likes of VTB in London?
Well, at the moment, these major Russian banks are being frozen out of the norms of international banking behaviours. Their routes to market are restricted, and this is a direct consequence of the unprovoked intervention they've taken in Ukraine. I can't speak to where we will end up on this, but we are determined that the Russian government, the Russian economy will feel the effects of the decisions that President Putin has taken in Ukraine.
And are you happy for shares of Russian entities, Secretary, to continue to be traded in London? Because you'll know that a number of Russian businesses, of course, have listings in Russia. They're not able to trade right now, but they're trading in London. Is that something that you see continuing?
Well, we continue to work with our allies across the globe to look at the appropriate interventions, and the intensification of those interventions is something that we're committed to as this crisis develops. We don't take anything off the table, but obviously we also look at the effects and what behaviours will ensue from whatever decisions we make. We've got to make sure that we make those decisions, as we did with SWIFT, in alignment with our allies, and particularly in the US and Europe, to make sure that they're effective, and we will continue to have those conversations at that global level.
All right, John Glenn, UK Economic Secretary to the Treasury, thank you so much for sharing some of your time with us this morning. Meanwhile, on this side of the Atlantic, President Biden heads to his first State of the Union address with one global crisis, the pandemic, fading, and another, Russia's invasion of Ukraine, escalating. Joining us now is Julie Norman, lecturer in politics and international relations at University College London. Julie, we were just talking with the Secretary there about the options still on the table, and for now the Biden administration has left energy-related sanctions on the table but has not yet made that move. Do you think they can or will do so in the face of inflationary pressures faced by the domestic public?
Well, as we heard, it's still definitely an option, but the priority for the Biden administration throughout this entire crisis has been working in very close unity and concert with European allies. And Biden is very realistic that Europe, and Germany in particular, will be the one to feel that rise of energy prices rising even quicker than Americans will. Obviously, it will affect the American market as well, but Biden is also, again, trying to coordinate between multiple countries with multiple energy interests on this. With that said, you know, he has been really pushing for increased aid to Ukraine this week. They're trying to get a $6 billion package through the Senate that will most likely go through by next week. And so the U.S. right now, I think, is trying to see what can we do with sanctions, but what can we also do in terms of getting more military aid directly to Ukraine.
Can President Biden profit off of a more aggressive stance here? I mean, it's no secret that his approval rating has been incredibly low. He was hit hard by the way the U.S. pulled out of Afghanistan, and inflation has been, you know, a constant thorn in his side. So doesn't he need to take a really aggressive stance against Russia here?
He does need to come out and show his leadership here, Matt. You're absolutely right. And the State of the Union is often a time when the president kind of touts his accomplishments. But in this State of the Union, I think Biden's going to need to kind of walk a fine line between highlighting what he's done, but also really recognizing concerns around inflation, most notably, but also this question of global instability and how that will affect inflation. We know that from recent polls, about 6 in 10 Americans are already feeling the effects of inflation, about 3 in 10 in very significant and hard-hitting ways. So Biden really needs to be direct with the country in terms of recognizing that he understands this, but also being very clear in what he plans to do about it, especially knowing that the crisis in Ukraine will likely increase those prices. So it's a tough position for Biden to be with already low approval ratings.
Yeah, I don't know if only 6 out of 10 Americans have felt the effects of inflation. I don't know what the other 4 are doing. I mean, maybe they're, children under the age of 10, because everyone else is feeling it here. How hard does this administration have to fight against it?
Well, it's clearly the #1 issue against Biden right now. It's a tough issue for him to be having going into a midterm year in particular. And as you said, it's something that most Americans feel in some way, shape, or form. Definitely at the gas pump, definitely in terms of buying food, groceries, kind of basic necessities. And it's especially felt by those kind of under the $50,000 income mark, so working class Americans in particular. So again, the administration has not had great messaging on this until now. I think the State of the Union presents an opportunity for Biden to reset how the administration is going to tackle this with a little bit more transparency and be a little bit more clear-eyed about the impacts.
Julie, nobody wants war, but wars can throw up opportunities for bipartisan cooperation that might have been more difficult to achieve otherwise. Any sense that these kinds of geopolitical developments open up avenues that may have previously been closed?
Well, and it does in many ways, and we have heard some statements from Trump and some of his supporters that are very contrary to what we're hearing from Biden and most congressional representatives on the Hill. But in last night's meeting between the Ukrainian ambassador and senators, there was definitely bipartisan support there, again, about trying to support Ukraine, trying to figure out what sanctions were going to be best, and again, really trying to ensure that the U.S. was a leader in getting that military and also humanitarian aid to Ukraine as soon as possible. So I do think we'll see a bit more unity on that issue than we do in most in U.S. politics.
All right, thanks so much for joining us, Julie Norman, lecturer in politics and international relations at UCL. Always appreciate your time. And of course, you can stay with Bloomberg for our coverage of tonight's State of the Union address, followed by the Republican response. That starts tonight at 8:30 p.m. in New York, 1:30 a.m. in London. And while we'll all be watching that, of course, we also have to continue to watch the headlines crossing on Ukraine and Russia and the market response. I'm focused on oil once again. Brent back above $101 a barrel. WTI dancing around that $99 level, even as we have talk of Biden and the U.S. potentially with other countries coordinating another SPR reserve release.
Yeah, I'm constantly pulling up GLCO Go to see the oil prices as well. But, I'm watching this massive convoy marching into Kiev right now. If it's an over 40-mile column, that just means it's an incredible amount of force ready to rain down on the capital city. And I wonder, what that means for Vitaly Klitschko. I wonder what that means for Zelensky. I wonder what that means for the people of Kiev and Ukraine. And it's incredibly concerning.
Yeah, absolutely. And we continue to watch the images of that, and also the flow of people moving towards the borders, crossing the borders into Warsaw, into Poland and the like. From a corporate perspective, I'm really watching all the European corporates and their response here. We've heard from big oil in the UK, of course, and not just a little bit of political pressure, it would seem, being applied, at least meetings taking place between big oil and the UK government. Will we see that in France as well? We've heard from Le Maire. He's going to be speaking to the Total Energies management. So things are changing fast in what Western businesses are prepared to do in Russia still. More Bloomberg surveillance is ahead. This is Bloomberg.
going to primarily be chips for your own business, or is this going to be more centered around the foundry business and external customers?
It's going to be both. And what we said today is we're announcing 2 fab modules. It's a large location, 1,000 acres, because I'd hope to build out a full 8 fabs or more on this location. And, if we do that full project, it would be $100 billion over the course of the decade or so. So a massive project, initially 3,000 jobs, 7,000 construction workers, supply chain, et cetera. I mean, this is just fabulous. And the products will be our most leading edge chips. So as we said, this will be the angstrom era when we're going to 2 nanometers and below into the angstrom era. So it'll be the most advanced chips, potentially the largest manufacturing location in the world. We'll use its output for our internal products, but also for those of the foundry customers as well. So it's going to cover both.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
How difficult was it to go to investors and say, invest, give money, put money into a travel tech company within this environment?
It wasn't that difficult because TravelPerk is doing much, much better than the rest of the industry. In fact, we are at the moment growing at 4 times revenue of pre-COVID numbers.
It's not a bold statement to say that the world has changed fairly dramatically over the last couple of weeks.
There is a substantial tension here between growth and inflation.
Often what creates these liquidity shortages is just sheer panic.
When you look at the consumer, it is healthy going into this.
They're griping about inflation, but it doesn't seem to have that big of impact.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
A new month, the same heartbreaking story from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down 0.5%. TK has struggled this morning to keep up with the headlines.
Well, the futures down 0.5% barely describes it. The market is moving on the sub-headlines out of Ukraine. John, you see the 10-year yield come in. All of a sudden, John, I'm looking for the 30-year U.S. to come under 2%. Markets are reacting to the micro headlines coming out of Ukraine.
You're looking at 10s, Tom. I'm looking at 2s. I'm looking at the front end in the U.S. with a massive bid as we start to fade out, price out more rate hikes, not just in the U.S., but in Europe too.
John, I came to a complete halt yesterday, 3 p.m.-ish New York time, after the surveillance nap. There was Swiss franc stronger through 103. And John, you and I have been watching the 10-year real yield. It indicates some form of inflation impulse and world slowdown, particularly in Europe.
That's the market movement, Tom. The military movement gets your attention too. That convoy heading towards Kiev got everybody's attention.
This is a real moving story, John. To me, the major thing in the last 12 hours is a dearth of video out of Kyiv and out of Kharkiv. That's because people have left. As you know, the refugee maps that are being postulated are extraordinary. But that convoy with the length and the steady movement to Kyiv, Sky News has them 15 miles outside Kyiv.
Lisa, just utterly depressing right now, looking at some of the pictures coming in.
Depressing because what's the end game here? How is Vladimir Putin going to exit his stage without it causing more damage on Ukraine? And that seems to be the sort of feeling at the same time that the Ukrainian army is putting up a good resistance.
Companies pulling back. Keeps piling up, doesn't it? That list is getting bigger and bigger and bigger. Shell joining BP, others too. The bank's pulling back, Lisa, even though they don't actually have to, but they're choosing to.
Well, do they not really have to, or are they basically trying to avoid consequences down the line, either politically or socially? And at a certain point, we talked about this a lot yesterday, self-sanctioning, how much you're going to start to see that increasingly, and then the pressure to do the same at other companies that have failed to do so far.
Tom, just going through some of the great work of our colleagues at Bloomberg News, SocGen, Credit Suisse have stopped providing trade finance for Russian raw materials. That, according to people familiar with the matter, ING, Rabobank restricting lending to deals involving movement of commodities from Russia and Ukraine. We've all seen the headlines regarding China. Chinese banks, Tom, also pulling back to some degree. It's that theme. Lisa mentioned it. We talked about it all yesterday. sanctioning, self-imposed
Yeah, you're the one that
restrictions.
said this, John. Soft sanctioning. I like that phrase. I don't know who to give credit to for that. John, what I would notice, and this is the combination subheads, is Mario Draghi in Italy, a little bit of central bank experience. He talks about the inflation shock you mentioned to me before we went live on air. And then also Mario Draghi saying the central bank of central bankers, the Bank of International Settlements, has to step in. That surprised me.
You get the feeling, Tom, they're not done. It's not over on this front. There's more to come.
The biggest shock for me, John, in 24 hours, and truly it goes back to my childhood, is to see Swiss abandon neutrality. Basically, the gnomes of Zurich yesterday said, enough, we're not independent, we're not Switzerland, we're joining Europe in protest, and that's what you see with the Draghi follow-on to BIS.
That following the big shift from Russia as well. Here's the shift in the market for you. Futures are negative 0.6% on the S&P. On the Nasdaq, we're down 0.6% also. Yields come in 172.75. 2% wasn't long ago, just a few weeks back. 172.92. We're down by 9 or 10 basis points. On 10s, on 2s, we're down by more. Crude up by 2.7%, 98.30. And in the FX market, the euro showing some weakness here, Lisa, as we push out those rate hikes into 2023.
Yeah, dollar is still very much the haven. Let's sit on that idea of pushing out rate hikes. The idea that now the market, if you look at the Fed rates market, is actually pricing in less than 5 rate hikes by year end from as many as 7 not so long ago. And this really feeds into the underlying economy, and that's what I'm watching today. At 10 a.m., we get a read on the February ISM manufacturing data in the United States. How much do prices go up further as a result of some of the disruptions? We'll get a read on ongoing supply chain disruptions at a time where it's highly fluid and likely to get worse, especially if there's any connection to Eastern Europe. Today, retail earnings do continue, and again, this is with an eye toward all of the geopolitical noise that we're hearing, and not just noise, but altercations. How much can companies pass along those costs to U.S. consumers that are watching prices go up and expect them to go even further? We'll be speaking with Michael Fidelki of Target, the CFO, and Michelle Gass, Kohl's Chief Executive Office, will be speaking later today. We, of course, get Costco and the Gap, Kroger, a number of others throughout the week. And then, of course, 9 p.m., this is really the big event that everyone's watching. President Biden assessing his first year in office, delivering the State of the Union to a joint Congress with a very mixed review backdrop here. His approval rating has fallen to near the lowest in his presidency, to about 40%. And this comes as people are really worried about inflation rising to the highest levels. If you look at CPI going back to 1982, John, how will he address that while also talking about the importance for the U.S. to remain a social presence and to impose something of a democratic order in a world where it's looking increasingly like Vladimir Putin is a tyrant in Eastern Europe?
It's a tough order, that's for sure. Supply chains, inflation. Tom, on supply chain, AP Moller Maersk suspending bookings to and from Russia. You can see this building, can't you?
I'm so glad you bring this up. This is about a logistical shutdown. Ken Rogoff years ago talked to me about this, John. This is so important. It's not about, Shell and BP and that I get. Maersk moves things, and they're saying, no, we're not going to move it.
Team coverage starts right now with Bloomberg's Emily Wilkins in D.C., Maria Tadeo in Poland today. Maria, can we just start with you? What you're seeing on the ground, what you're hearing from everybody around you?
Well, Jonathan, every official that I've spoken with today says the nature of this war changed yesterday. That is the reality. It was a brutal, very severe attack on the main citizen, Ukraine. This is day 6. The Russians are running out of patience, and there is real concern. And today I'm in Warsaw because the Polish Prime Minister Morawiecki will be meeting Boris Johnson, and then he heads up to Brussels. He says it's time to wake up. This is going to be a long war. The nature of this war is changing. It is becoming brutal. We're seeing attacks on people, on buildings that have nothing to do with military points or military targets, and there needs to be a conversation in Europe about further sanctions, whether that includes energy or not is your guess, but that is where I believe the conversation will head next. And of course, a much more most forceful response on Russia would happen yesterday for many, particularly here in Poland, which, remember, this shares a border with Ukraine, and Belarus, which is now actively involved in this war, is very, very concerning. The message is that the nature of this war has changed.
Maria, what I noticed in the last 24 hours is a lack of videos out of Kyiv and Kharkiv, in the sense that people have abandoned. There's a refugee number bandied about of 500,000. Do you have any reporting that it's far larger than that?
Well, it could be, and many are expecting perhaps we're going to see up to 1 million people that are fleeing war, especially after yesterday. The population of Ukraine is terrified when you see an attack on residential buildings. This has nothing to do with military targets on the ground. When you see a message from the Russians saying the invasion will continue until we fulfill all of our goals in Ukraine, well, that, of course, is terrifying for the population on the ground. What I would note, and this is very important, Tom, is that I do not get the impression that this is going to be a repeat of the 2015 refugee crisis. The response on the ground is very different. I'm here in Poland, and what they say, if you're Ukrainian, even if you don't have any information with you or any passport, no documents with you, you're welcome in this country. You have to factor in, this is so important, the very deep historical and cultural connections between the people of Eastern Europe, the Slavic cultures. They all believe this is a huge attack, not just on Ukraine, but also in Eastern Europe. That's what they worry could come next. So again, I would be very careful about saying that this is going to be a repeat of 2015. What I see on the ground is this is a population that is welcoming the people of Ukraine.
Emily Wilkins, how concerning is this for President Biden, given all the steps that they've taken and given the pressure on him to move further into including oil companies and the sanctions at a time when gas prices are the highest since 2014?
Well, President Biden, in some sense, is really stuck between a rock and a hard place here. Yes, he absolutely wants to put as much economic pain on Putin as possible. That does include looking at the energy sector, something that the administration has tried to not do, given the fact that we're still in that global pandemic. We're still seeing really high gas prices. That's the other thing for Biden. He knows that a lot of Americans are hurting right now financially, and that is very, very clear for prices at the pump. And so he's really going to have to balance those two things. We have reporting on the terminal this morning about the U.S. and other countries looking into tapping into those strategic reserves again, getting more oil out there on the market to sort of compensate for what is happening with the Russian and Ukraine crisis. And I think there's some really interesting polling out this morning from Morning Consult that really sort of drives home how Americans are thinking about Russia and Ukraine versus domestic issues. We see over the weekend that approval for how Biden is handling the Ukrainian crisis actually went up slightly. We still don't have a majority of Americans who approve of how Biden is handling that crisis, but it's going up. At the same point, Biden's overall approval rating, that went down over the same amount of time. And it shows that while Americans are cognizant of what's going on in Ukraine and Russia, they're still dominated by domestic issues.
Emily, thank you. Emily Wilkins down in D.C., Maria Tadeo in Poland today. There's a big bet emerging in this market. This line from BlackRock, Tom, captures it. We now know what we're dealing with, a protracted standoff between Russia and the West. We also think it has reduced the risk of central banks needing to slam on the brakes. That is the big bet, Tom, that's emerged in this market in the last couple of weeks, and you see it getting priced in again this morning.
Here we are, March 1, and we're going to see on the central bank the data out of the United States as well. John, I'm going to go back to the Italian data this morning, which is a very high inflation statistic, and if Chairman Powell gets that 4 or 5 days before the Fed meeting, that's going to soup it up even more. I mean, I would still wait here into March to see what this bank does.
I couldn't agree with you more, Lisa. There's a big difference between taking 50 basis points off the table and trimming the whole rate hiking cycle. A big difference.
Especially because this only increases the inflationary pressure, the stagflationary aspect, of course. How does the Fed deal with that, given how low rates already are?
The coverage worldwide continues. Futures down 0.6%. Yields in 9 basis points. In the 170s on 10s now. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia stepped up shelling of key cities in Ukraine overnight. The mayor of this country's second largest city, Kharkiv, says residential areas are being bombed. Meanwhile, Russian ground troops were slowly moving in a large convoy towards the Ukrainian capital, Kyiv. The US and the EU have increased sanctions on Russia's economy, but the penalties don't seem to be having any impact on the military campaign. And the price of oil kept rising today. Investors are trying to figure out whether a possible release of crude from strategic reserves by the US and its allies could do much to curb what's been a dramatic surge in prices. The American oil benchmark has whipsawed around $100 a barrel since the Russian invasion of Ukraine last week. And the White House had to shift gears for President Biden's first State of the Union address tonight. Originally, the president was going to highlight the improving coronavirus outlook and rebrand his domestic policy priorities as a way to lower costs for families. But now the speech also will highlight the Russian invasion of Ukraine and nuclear saber-rattling Vladimir Putin. And JP Morgan Chase CEO Jamie Dimon warns that disconnecting Russian banks from the SWIFT messaging system may bring unintended consequences. Dimon told Bloomberg TV that so-called bad actors could find ways around the penalty. JP Morgan was amongst Wall Street firms that had counseled Washington against kicking Russia off SWIFT. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has announced it's moving 8,500 more troops to Eastern Europe. If they're not being deployed to Ukraine specifically, why is that so important, and does that risk further provoking Russia?
Well, there's two things going on. So what the United States recently announced is that we are going to put 8,500 troops that are part of the NATO response force on high alert. That means they'll be ready to deploy on a moment's notice should we need those forces anywhere in Europe to protect NATO territory. In addition, the United States is also looking at possible additional moves that they might make to move U.S. force posture into Central and Eastern Europe. The reason we're looking at that is because a lot of the members in that neighborhood in Central and Eastern Europe feel concerned. And so we are looking at what measures we might take in the name of reassurance and deterrence.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Tonight overnight.
We are ready to respond decisively.
Bloomberg brings you live coverage of the State of the Union address.
America is back to work.
Hosted by Joe Matthew.
Inflation is kind of the #1 talking point so far.
Reaction, analysis, and what it means for Wall Street.
He did leave this door open.
Those are the words Democrats wanted to hear.
Biden may get a little bit of a lift on this.
The State of the Union address, followed by the Republican response. Coverage begins tonight at 8:30 Eastern.
If Ukraine does not survive, international peace will not survive. If Ukraine does not survive, the United Nations will not survive. Have no illusions. If Ukraine does not survive, we cannot be surprised if democracy fails next.
An emotional address from Ukraine's ambassador to the United Nations from New York City this morning. Good morning. Futures are negative on the S&P, on the Nasdaq too. On the S&P 500, lower by 0.6%, down by 0.7% on the Nasdaq. Your latest headlines, this one from Interfax. Russia saying it will continue its, quote, operation in Ukraine until its goals are met. There's a bid in the bond market off the back of a lot of this. We're down 7 basis points on 10s. That's the US at 175.31. Take a look at Germany. The 10-year in Germany, Tom, down by more than that and back down to zero.
Yeah, we're back down to zero in Germany, and it's a coordinated move, and it's a real nuance. Give me the Haven chart. There it is. Thank you. On Bloomberg Radio, it's real simple, John. Help me here. 105 rubles of fiction. That's an artificial pricing off of Moscow. I don't know where that should be, John, out to 115 where it was for a cup of coffee. But the one I'd really look at, John, is the global war statistic, which is gold, 1925. It's moved there quickly this morning.
And Euro Swiss grinding back down towards parity, Tom. Euro versus the Swiss franc. We're seeing a lot of this take place in Germany too, down 11 basis points on 2s, on 10s, down by 13 basis points, a bit into Italy as well. It's not just a Haven play. Overall, Tom, to set the stage, the bet we're making on this market at the moment for the ECB, for the Fed, is that they can't do what we thought they would do a couple of weeks ago.
The Fed is the bet, and also that this will be a discrete collapse of an economy, that it will not have global ramifications. Someone who has studied this carefully with wonderful bull market experience is Benjamin Laidler. He's global market strategist at eToro, and we need an update this morning. Ben, you're way too young to remember what I remember, which was LTCM 1998. You lead your note today, and you say this is not 1998 for the Russian financial system. It's different.
So I'm glad you think I'm so young. I was actually an emerging market fund manager back there, so unfortunately I remember it very well. But I do think this is different. I think the contagion channels for Russia now are heightened global uncertainty and commodities. But this is not a rerun of 1998. And the reason I make that comparison was, frankly, that was the last time that Russia really had a global impact on the economy and markets. And you make that comparison, the economy is less than half the size relative to the rest of the world. The financial linkages with the rest of the world are a tiny, tiny fraction of that. And the global economy is in much better shape now. Back then, we were in the middle of the Asian financial crisis. Russia was about to have the biggest sovereign debt default the world had ever seen and break its currency peg. So difficult as this may be, tragic as this may be, I think the impacts are going to be predominantly local rather than global.
Ben, the key question here is the partial differentials of real GDP. It's going to be weaker, everybody understands, and clear evidence of longer, higher inflation. That larger nominal GDP, how does that change your bull market assessment?
Maybe controversially, I actually think the fundamentals have been getting better behind the scenes. Remember, most economies are now reopening after Omicron. We've just come off a strong Q4 earnings season. Valuations are significantly cheaper because markets are obviously lower, earnings are higher. We've priced in a lot from the Fed here for the liftoff on March 16th, and our contrarian investor sentiment indicator is at levels which we've only ever seen before at the 2020 pandemic, when the US got its debt rating downgraded, and in the 2008 global financial crisis. So really unprecedented levels.
Ben, at those particular times, central banks came in with force. And that seems to be what a lot of people are betting on now, that's the stabilizing feature in markets. Does that really count in the same kind of way when you've got inflation running at the hottest since 1982? And a lot of people are talking about the possibility of a stagflationary type of economic headwind.
So I'd say two things. I don't think we need central banks here at all. Policy is already very stimulative. Growth is very strong. Russia is a tiny economy. Its linkages with the outside world are tiny. I don't think we need central banks here at all. The other point I would just make on the inflation side is, yes, inflation's high, but oil markets haven't really done very much here. We're getting a very strong message that Russia's going to keep pumping oil and the West is going to keep buying it. Now, that may well change as things escalate, but oil prices $100 are not telling you that we have an energy crisis here.
So, Ben, it seems like you're pretty constructive, pretty bullish, that you think that bonds are still the pain trade going down the line, given that we are in this constructive time. How high would oil prices have to go? What would you have to see to change your view?
I think we need to go down this escalation route. We need to be looking at sort of what happened to Iran, full oil sanctions, which halved Iranian oil production. If we saw something similar in Russia, that would take 5 million barrels off the market, which would be dramatic, and we'd see oil prices at over $120. I think that would be a very different environment. But right now, we're not there. We may get there, but right now, that's not what markets are telling us.
Ben, got to leave it there. Ben Laidler, thank you, sir. And apologies for that technical disruption as well. We've done two things today in the rates market. We've erased bets for a move this year at the ECB, and we've erased bets of a 50 basis point hike, Lisa, next month, or rather this month now, at the Federal Reserve.
Okay, why? Is it because people think that the market needs more support? Is it because people think that perhaps the Fed will be a little bit concerned about the uncertainty? Because it's not the inflation data. And so at this point, what is the response function in markets to data that comes in hotter than expected with inflation if people think that it's geopolitical risk that's really going to be driving central bank actions?
And as you pointed out, Tom, the inflation data in Italy, hot. I mean, look at what that came in at, 6.2%. The median estimate was 5.5, 6.2 versus 5.5.
I'm going to go to St. Louis, Missouri, and James Bullard, and the shock that he had, John, of 3 to 4% real GDP. If we're even close to that, and, we've got target earnings coming out later, maybe that will help us with the American story. And you overlay on it, John, a global inflation for longer. You get out to the animal spirit of nominal GDP, which, granted, there's problems down the road, but in the meantime, things keep going.
Well, things are going to change potentially as well. We could get whipsawed. And Lisa, I think that's what you're teeing us up for here. Just the idea that perhaps we could be whipsawed in this rates market by the communication we get from the Fed later this week from Chairman Powell in a hearing, and then again on March 16th when they meet and decide.
You were picking up on the pain trade comment. I mean, how much do we start to see people pile into the idea of a haven bet in bonds and then see inflation surge itself back up as the main threat in an economy that has not seen this since 1982? I mean, put that into perspective, John.
I'm with you. Futures down 0.5% on the S&P. On the NASDAQ, we're down, let's call it 0.6%. There is a monster bid into the bond market. Yields are lower by 6 basis points, 7 basis points on 10s in America, much more so in Germany. From New York, this is Bloomberg.